There we go. Yo, what is up for everyone watching this on the YouTube replay? Hope you're having a great Saturday. We stream every single day of the week. Sometimes I miss a day or two of the week, but I really do try to stream every day and usually twice a day if I have the time for it. So check this out. Let me give you a quick portfolio update. Friday was a bit of a mixed bag. Check this out. On Friday, we were down 0.38%. Not too bad actually. The very beginning of the day was bad. We were initially down, what was it, like 1.5% in the pre-market, but then we were only down 0.3. Yeah, McDonald's was really green. Oh, I also bought a new stock. Literally on Friday, I bought not a brand new stock. It's a stock I already own, but let me share with you that in a minute here. We also have a Roth IRA, and in our Roth IRA, I kid you not, one of our holdings, DCTH, Delcath Holdings, again, as much as I love them, they're only a $150 position, but they increased 26% after hours on Friday following some successful results. So, hey, that's pretty cool, I guess. Here's our total percent change on every stock in here. Oh, we also bought another share of Iron Mountain. This is one of my favorite REITs out there, one of my favorite growthy REITs. I did some more research on them. And the more I look into Iron Mountain, the more I just want to buy more and more shares of this company. So we bought another share at 103. But yeah, that's our Robinhood portfolio. We also have our risk on Webull portfolio. So check this out right here. Here's our total percent share, our basically open profit and loss. We're up 19% all time. Hey, what up, Looney? Good to see you, friend. So yeah, we're up 19% all time. This is our risk on portfolio. We have a lot of risky names in here like AMD. A lot of these have stupid high valuations right now. All these trade at like 50 times next year's net income, like AMD, Robinhood, SoFi, not Supermicro, but all those trade at 50 times next year's net income because they're so growthy. So it's tough to buy a lot of those names. But then we have some stocks that we're down on that I think are actually worth looking into at these prices. We have some big losers in here. Obviously, UiPath, Zoom, Sprouts Farmers Markets had a slight recovery. Progressive dipped on earnings. I think they actually had good earnings. Let me share with you this right here. So here's what the stock fell on. They still grew their numbers very nicely. The net income grew 12% year over year after it grew 108. Like, they're holding on to these gains. They still have great margins. I mean, this was still a great quarter in my opinion. So anyway, Progressive's one said I'm looking to buy more on the dip. Hey, what up? We'll look at Nebius stock. What up, Joshua? Yeah, it's hard because my buddies are trying to get in right now. Supermicro's at a fair price. Yeah, you're right. Supermicro. Well, actually, here's the thing with Supermicro that scares me. But you're right. They're trading look at right now's PE. If you look on the kind of left middle there, they're trading at 31 times net income right now. Well, they're trading at 23 times next year's net income, which means there's a lot of net income growth expected to come. AMD and OpenAI, Oracle, OpenAI and Oracle are pumping orders to Nvidia and AMD, and those chips need to be installed. And Supermicro actually installs the chips for you, the whole server rack. It's kind of a commodity, and because it's a commodity, here's the one thing that scares me away from Supermicro. Well, the future sentiment's good right now. But if we look right here, the revenue's growing nicely. The total sales, the revenue is up 7.5. So the revenue's up 7.5. But if we go to their net income, their actual profits, it's actually down by 32% year over year. What does that mean in English, basically? It means they're losing their net margins. If we go to their net margin right here, it fell to only a 3.39% net margin, down 39% year over year. So we do kind of want to see the margins come back, the net income go back up. So yeah, that's our Webull portfolio. And then let me share with you our Moomoo portfolio. This is known as our buy and never sell portfolio. And I have a stock that I just bought on Friday. I already own them, but I finally pulled the trigger. I've been telling everyone I've been wanting to do this, but I decided to finally buy another share of Amazon. If you're like me and have the intention to never sell, it's worth buying Amazon even right here. So yeah, I mean, they're an ETF and one. I could rant all day about Amazon. So yeah. All right, let's look at Nebius right here. I saw that one. And what up, Looney? We'll look at P&R after this. I use their pool equipment all the time at my job. They make high-quality pump equipment. Let's check it out, actually. We'll check that one out after this. Wait, I wanted to look at Nebius right here. Actually, you know who owns Nebius? Nebius is actually in the Nvidia portfolio. Nvidia is so big, they own some individual companies like CoreWeave, 8PLD's been on fire, and they also own some Nebius. Again, I wouldn't just own a stock because Nvidia owns it. You're always gonna want to go do your own research on it. And when we go look at their numbers, I mean, this is what I think, in my opinion, justifies this major stock price appreciation. If we go to the revenue literally went from 14 mil to 100 million year over year. I mean, that's insane. That's, in my opinion, what justifies the stock price appreciation. And not only, oh yeah, so they did a crazy 100 mil of revenue this quarter. In 2 quarters, they're expecting 265 million. And that's mainly because if we go over here to their weekly news, basically Nebius secured a $17.5 billion Microsoft Azure cloud deal. So it's incredible. And that's the whole reason they gapped up on this day. There was no earnings, but they released that announcement. Hey, Jose, I appreciate that. Hey, by the way, yeah, if y'all want to follow button, we stream every day. I sell nothing. I have no course, book, WhatsApp, nothing like that. Watch out for people impersonating me. I'll never follow you or DM you. So check this out. Someone, my homie Lumi, shout out to the member Looney. He said, PNR, I use their pool equipment all the time. They make high quality pump equipment. Hey, let's check it out. So the stock has done pretty good the past couple years. Let's see. So yeah, pool equipment, let's see how that's growing. Probably, I don't expect too great growth just because of the high interest rate environment. People don't spend as much on their pools. The flow revenue, let's see. I like how diversified that this is. So they're in pool, flow, and water solutions. Their water solutions revenue is flat year over year. So if we just go to their total revenue, it's a bit of a slow grower. That might be, actually, they've done amazing since 2019, but it looks like there was a little hiccup. Oh, wow. If we go to the monthly chart right here, actually, they're still at an all-time high. So the stock's at an all-time high. Congrats if you own them. I would want to see more growth, but I think as we go into a lower interest rate environment, same with like Warren Buffett just bought Pool Corp. They make all the pool parts that they sell to contractors that then work on your house. So, the revenues, revenue's only up 2. Last quarter was down, it's down. But look at this net income. They're easily making 150 million of net income every quarter. I mean, very consistent. They pay a dividend and you get a 1% dividend. I like that the dividend's not too high. They have a safe payout ratio. They still have leftover money. What about the free cash flow? That's what FCF stands for. Yeah, it looks like their Q2 of every year is their main quarter. They made 600 million of free cash flow. And when you average it out, they're, 200 or 300 mil of free cash flow quarter. Actually, I really like that one. They kind of remind me of Pool Corp, POL, and Warren Buffett just bought this name right here. Largest distributor of pool parts, manufacturer and distributor of pool parts, largest market share. This one also, look, the whole pool market, their revenue is only up 1%. Last quarter was down 4%. So it's kind of just the whole industry. Actually, that other company we were just looking at, honestly, it makes more money than this company. The free cash flow is much better on that other stock. So would I rather buy this one on the dip or Pentar? That one actually looks pretty cool. Actually, let me go add them to my watch list, actually. I like niche stocks like this. Can't be replaced by AI, pool pumps. That kind of reminds me of Badger Meter. Is that BG? They do your water meters on your house. Largest market share for, let's see, innovator, manufacturer, and distributor of products. Okay, yeah, so this is another water meter company. Okay, let's get off that. Greg said, what do you think of the rare earth mineral stocks? Yeah, they're great. They're great right now, but it's tough, the risk reward on some of them. I love MP Materials. The government right now is taking a bunch of stakes into these rare earth mineral stocks because we need to be more rare earth mineral independent because China's given us now hard, the permitting process is now really hard to get access to the rare earth minerals, and we need this. So, yeah, look at this. Number 2, China implements new export controls on rare earth elements. So, hey, dude, hold on here. Try not to spam. Oh, my goodness. All right, we'll block that guy. Okay, so, yeah, MP Materials, this one, they're actually opening up a rare earth mineral mine that's going to supply the U.S. for the next 50 years with certain rare earth minerals. So, that one's interesting. So let me scroll back up here. What did I miss? Hey, what up, Two Trick? What's your favorite dividend-paying stock? That's hard to answer because if I go over here to our Robinhood portfolio, every stock in here pays a dividend. So it's hard to say one favorite because I have a favorite for each category. Is a dividend growth company, like a Constellation Energy or a Google. But if you're talking a pure dividend, a high yielding play, a 3% yield, I like Iron Mountain. I actually just bought a share of them on Friday. I bought one more share on Friday. And also I bought one more share of Amazon. Another one I think is a great one to just never sell. Yeah, Justy, what's up? Yeah, hey, yeah. I hear Justy, if I'll give you a moderator if you want to help me out here. All right, so let's keep going here. Thoughts on GLD? What up, Stefan? So GLD, this is actually, I'm going to give you a life hack here. So if we look at the GLD ETF, this is literally the commodity of gold just in an ETF. And check this out right here. It's at an all-time high right now, but you see how I have another stock kind of overlaid over it? That's ticker symbol IAU. It literally moves identical. So as we can see, both assets on the screen have literally moved the exact same. I mean, the difference is nothing. They move the exact same. But if we look at this ETF, it has a 0.4% expense ratio. But if we go to ticker symbol IAU, which again is the exact same ETF, exact same gold ETF, you actually save 0.15 bips on expense ratio fees. So for every $1,000 you put in, you're saving $15 a year in expense ratio fees. So there's your little, there's your life hack there. Save on expense ratio fees with IAU. It's actually run by BlackRock. This is the iShares BlackRock Gold Trust. Just moves with the commodity of gold. You should do Path. Hey, Path is one of my biggest losers. You know what? We'll check them out. So UiPath, I'm still, we're down 25% on our position. I'm still investigating. Does this company have a moat? They were the original like AI robotics autonomy company, but they kind of just got out innovated by all their competitors. So if we look right here, it's gone now, but basically to increase their AI products, they partnered with Snowflake, Google Gemini, and OpenAI, and Nvidia. And that's really why there's been so much momentum. And if you look at the volume down here and just these weird candles, that's all from the Nvidia Snowflake partnership. So I do own shares. I might be biased, but I'm not loving this name. I mean, nothing's really blowing me away here. They're too cheap to sell. They have no net debt is what I really like about them. How much interest are they making a quarter? They literally make 12, since they have so much cash on hand and so much net cash, they literally make 12 million of interest on their cash a quarter, which goes straight to the bottom line. Actually, look at this. So here's what you can tell. If we go to the operating profit, the core underlying business, they lost 20 million. So they lost 20 million. But if we go to the net income, and this is before taxes, okay? So their before tax number is negative 20 million, but their after tax number is positive 1 million. The reason they made 1.5 million of net income when losing operating profit was because of their interest on their cash, because operating profit does not include taxes or interest. Pretty cool. Okay, so I would keep them as a small position, UiPath. Hey, Mr. Beast, no way. The official Mr. Beast is in here. He asked me what brokerage am I using. Yeah, hey, by the way, if you want to get this brokerage I'm on, it's in the link tree in my bio, the very first link there. It's actually, it's a brokerage where you buy, stocks on. And it's an affiliate link too, full disclosure. So if you go and deposit $100, we'll both get some free stocks. But yeah, if you're on a YouTube stream, it's in the link in the description. TikTok, it's in the link tree in my bio. And hey, shout out to the homie Isaiah, no way, with the hand heart gift. Heck yeah, dude. He said, thoughts on CMCSA? Hold till 2026. I think that's kind of the right move. I almost see this as like a cash and cash equivalent play. Hey, Justy, no way. Hey, thanks so much for the hanging lights gift. No way. I really appreciate that, Justy and Isaiah. Thank you very much. I hope you guys are having a great Saturday. So here's Comcast. There's one thing here that I don't love, and that's their main business. 60% of the revenue is the residential connectivity business. It's just going to decline single digits for the rest of the time. Cable business, not too, residential cable business, not too popular with streaming services nowadays. So I really want to see them invest more into their other businesses. Like they have a media business. They own like it's Universal Studios, or I think it's DreamWorks or whatever. They own, Comcast owns that big thing that owns like Despicable Me and all that. Studios, theme parks. Universal Studios, like where Legoland is, and Comcast owns that. So anyway, but if we go to their net income right here, by the way, they didn't make 11 billion this quarter. That was a one-time adjustment. So, but they're usually making about 3 to 4 billion in net income a quarter. So they have a lot of money to play around with. And since they have so much leftover net income, you get a 4.33% dividend. But the best part is actually the share buyback. So if we go over here to the cash flow statement, we can actually see, the dividend only cost 1.24 billion. So the dividend cost 1.24 billion. Oh, they actually haven't done any share buybacks. Never mind. So they're not doing any share buybacks. Anyway, I don't love the fact that their residential connectivity business is just going to decline for the rest of time. You wanted to see the growth come back to this name. The lifeblood of the company, the revenue is down 0.5% year over year. It's like low single digits, 2%, 6%, -2%, 1%, 2%, 0.8%, 1%. Like it's just single digit growth. We want to see growth come back. Hopefully that was helpful. If you're retiring in 10 years, I wouldn't buy them and just never sell them. I'd go into something more tech. Hey, Mahmoud, how's it going, man? Hope you're having a great Saturday. New York said, have you ever heard of Oh, ISRG. You know what? Let me go over ISRG if you don't mind instead of that one. So, ISRG is one of my favorite medical device companies out there. So, if you don't have any exposure to like medical devices, this is a cool one. They make those huge screening X-ray machines. It's the thing that detects like the metal in your body, those huge scanners. They make those. I forget the name of it. I'm blanking right now. But anyway, if we just go to their main business, their instruments and accessories, check out how growthy this is. I love this. The revenue's up 18, after grew 15, after grew 20, after grew 15. Like they're on a streak right now. And not just they sell the hospital's instruments, but they then also service them. So they have this reoccurring services business. And look at how growthy this one's been. Up 23, after 10, after 14, after 14. So this is just a really growthy name. And that's kind of, I think, what justifies this high PE. Now, I think this PE is still a bit too high, but again, they deserve it. If we go to their net income, look at this profit. I mean, this is insane. 600 to 700 million of after-tax net income a quarter. And check out the growth rates, up 25. So the sales are up 21. So that actually means they grew their net margin. And look at this balance sheet. This is incredible. This is the kind of stock that I'd want to own. They literally have no debt at all and $5.3 billion in cash. They're also earning interest on their cash. Let's go see. No way. They made $88 million of interest on their cash. $88 million. A lot of companies out there are paying negative interest, but literally just in interest, they're making 75 to 90 mil a quarter. And that goes straight to the bottom line. Okay, cool. So that's ISRG. They don't pay a dividend, but they make up for it. Oh, they also do share buybacks. Let me see if I can find that. So net income's up 24, but actually they're not doing share buybacks. Never mind. Okay. All right, let's go over some more here. Head and shoulders pattern for Comcast. Hey, what up, Nico? Another crazy Friday, was up 15%. Now I'm down 10. Dang, Brian, you got a volatile portfolio there. Yeah, on Friday let me actually go check. Since we're no longer in Friday, it doesn't show it on our other portfolios, but it does show on Friday we were down 0.4. Initially we were down 1.5. Yeah, we have three different portfolios here. We got our Robinhood, here's us year to date. We're still doing great year to date. We're almost at an all-time high. During the tariff fears in April, here's why you never sell, or as long as even if you didn't buy the dip, if you just didn't sell, you're doing amazing. We were down 13% year to date. Now we're up 17. We also have a Roth IRA. We started this one almost exactly a year ago. And this super risky micro cap. Like look at them on the all-time chart. Okay, so let me get that out of the way. But they did have some successful results, so we're up 31% on them. I do want to go over Delcaf later. All right, so let's keep going here. What is this platform? Hey, Chaos, what up, dude? Yeah, hey, by the way, if you want to get this platform I'm on, I don't know which one you were talking about. I have so many brokerages. These are all, by the way, brokerages. It's where you buy stocks on. They'll ask you for a bunch of information. So if you want to get any of these brokerages, they're all in the link tree in my bio. This is my personal favorite one. It's the lowest fee brokerage. It's free, no commissions or anything. You get the free idle cash interest. So if you want to get this one, my favorite one, it's in the link tree in my bio, very first link there. Oh, by the way, they're all affiliate links. So if you go and deposit $100, we'll both get some free stocks. Okay, so thoughts on ALAB. Is that the company? No, Nvidia doesn't own them, but they have been on a growth beast. Hey, Isaiah, you don't have to keep giving gifts, man. If you ever got a stock you want me to look at, let me know, Isaiah. I got you. So check this out. Astera Labs are here. This app is telling me, this app also gives some technical analysis whenever there is. Like, I didn't even draw this, and they're saying that this is what is this? A bearish continuation triangle. Okay, so that's the technical analysis. As you know, I'm a fundamental investor. Let's see, what was the news here? BlackRock acquires 5% stake in Astera Labs. Hey, that's good news, right? Astera Labs, this was the news why they fell. Astera Labs partners with ARM for AI chiplet development. I don't know why the stock fell on that news. There must be some reason investors didn't like it. Maybe it's more of a win for ARM than ALAB. Who knows? But here's why before this gap down from that ARM news, the reason the stock has been doing so well before today is because of their great numbers. I mean, here's the orange line, which is what the analysts expect. Every quarter, look at this. They're beating on the orange line and on net income. So they're beating on revenue, beating on net income by double. They beat by double on their net income. And on EBITDA, analysts expected 54 mil of EBIT. They reported 75. So no wonder they're gapping up on earnings. If we go to this is what justifies the insane multiple and stock price appreciation. I mean, this is what you want to see. Revenue's up 150 after it grew 600%, and not just revenue, but they made after-tax net income. The past three quarters, 51 mil, 31, 25, and look at this fortress balance sheet. I mean, that's a monster. Assets are growing every quarter while liabilities are staying the same. They now have over $1 billion of cash, up from 830. Everything there fundamentally is headed in the right direction. And that's actually why they're on my watch list. I'm looking to maybe buy them on the dip. CRDO. Oh, we'll look at CRDO after this. They're actually kind of similar. Do you know what's going on with Delcat? Yeah, we'll look at Delcat after this. Hey, someone's been saying Kratos. Hey, try not to spam their factual, but I got you. Let's check out Kratos right here. This is really your government contract play. They also have a small drone business. Again, I was looking at a lot of drone plays. Again, a lot of the drones that are produced are like anyone. There's no real patents for like drones, and if there is a patent, like anyone can kind of just manufacture around it. So there is a great drone play, Axon. That's like the only one. But check out Kratos right here. Their main is their government operations. If we go to their government solutions right here, because the government's the largest customer, it's up 30% year over year. They were actually able to renegotiated higher prices. And look at how much they beat on revenue. This is what was insane on the earnings report. Analysts expected 305 million. They reported 350 mil. So it was a huge beat on their sales. It really shocked investors. But yeah, wait, let me check. Yeah, here's their drone business. Their unmanned systems, drones, down 15% year over year. But hey, interesting government play. Certainly super overvalued. They trade at 830 times net income. But again, they're beating on expectations. And that's what why the stock goes up. So Credo Technologies right here. This is another great company. Remind me to look at SoFi, Adobe. What is SRFM? Well, we got to look at a lot of these. Hey, what up, Zeus? Have you seen Hank Green's? I have. What up, Zeus? I actually have not seen that. So here's Credo Technologies right here. Another one that I think isn't just propped up the stock isn't just propped up on momentum right now. This stock absolutely deserves to be doing this good. Here is why. Again, we can see that every quarter they're beating on analyst expectations, not just on revenue, but on EPS, which is net income per share. So net income beating and on EBITDA. So these are the kind of companies I want to own. Growth monsters. Like the revenue's up 270 after it grew 70. Not just revenue, but also net income the past 3 quarters, insane net income, and also another fortress of a balance sheet. This one looks so similar to Astera Labs, their numbers. And look at the cash from operations. Oh my goodness, dude. This one is great. Like, they deserve a high valuation. What is this site? Yeah, hey, what up, User36? By the way, if you want to get this site I'm on, or this is a brokerage, it's a software we buy stocks on. If you want to get it, it's in the link tree in my bio, very first link there. So let's see, Adobe stock. This is another software name. Really being hurt by the AI. Okay, I had to turn on my fan. So Adobe, what's this right here? So this app is telling me that there is a bearish flag. Okay, that's not good or something. But anyway, the reason Adobe's multiple is collapsing right now is because the AI thesis is hurting them. They're saying in 10 years from now, will we need Photoshop? Will we need After Effects? I know someone who just made a great logo in ChatGPT that would have taken me a long time in Adobe. But I'm always a believer that in the long run, I think humans are always going to need that final touch on art. And I think Adobe will get priced from an AI loser to a slight AI winner. And as much as I believe that thesis, I don't own any shares. And I would recommend to nibble slowly. Like, I would not have this as a meaningful size position. I would nibble on them because right now their numbers are still great. Their numbers right now are amazing. But again, it's that future expectation of maybe them losing market share to AI. Again, if we look at their net income right here, they're easily making 1.8, 1.7 billion net income a quarter. And also, Adobe has this product. It's a DocuSign competitor. DocuSign in Adobe does exactly what DocuSign does. And if we go to DocuSign right here, why did the stock just fall off a cliff? Because OpenAI just created something called DocuGPT. DocuGPT is now a direct competitor to Adobe and DocuSign because that's like 10% of their whole business, which is still a not small chunk. But again, for right now, Adobe's still making good money, 1.7, 1.8 billion in net income a quarter. And what is Adobe doing with 1.8 billion net income a quarter? Here's what I love about them. They are deploying it all in share buybacks, doing 2 to 3 billion a quarter, solely buying back their own shares. Now, one thing I think Adobe would do that would be genius, and I'm actually going to re-add them to the top of my watch list. I hope Adobe does this. What they should buy a company, do some M&A, instead of spending, how much did they spend this past year? They spent almost $10 billion just solely buying back their own shares this year. Maybe do a 5 to 10, that's half the market cap of DocuSign. They could have bought half of DocuSign or at least take a stake into a company. That's what Uber's doing right now. Uber is taking stakes into Grab. They're taking stakes into, it's like that one competitor to, Archer Aviation. But anyway, let's keep going. Thoughts on HIT? Let's do it. Can we check out their numbers? Let's do it. So health in tech. So a really, really small name. Do beware. If you look in the top right, the market cap is only 170 million. So do beware. That is extremely tiny. But let's see what they do. I actually don't know. Let me go down here. So software application, marketplace of healthcare. Okay. Do they have revenue? So they do. Check out actually, that's impressive. 86%. Did we have analyst expectations? So we do. We do have a little bit of future guidance from analysts. And look, analysts expected 7.5. They reported 9. Again, we're talking $100 million company here. So this is the part that's most fascinating to me. So again, if we look at what this whole company's worth, the whole company's worth 170 million, and they're actually net income. Like if you average it out, they're easily making net income every single quarter. It's not much, 600,000, but that's way better, and that's real as well. That's not like gap adjustments or something like that's real net after-tax net income they're making. What about free cash flow? Yeah, cash flow looks good as well for again $100 million company. It's honestly not the end of the world. Looks like their their margins fell 15 after falling 12. So the gross margin went from 83 to 67. So they are seeing a bit of margin collapse, but that doesn't matter. As long as they stay net income positive, they could be worth 100 mil or more. Keep up that 86% year-over-year growth. Okay, MK said, can we check out Terp stock? Let's do it. So what are all the apps you use? Yeah, hey, all the apps I'm using are all in the link tree in my bio. Yeah, the apps are called Webull. These are all brokerages, by the way. I got Robinhood, Moomoo. All of them are on the link tree in my bio. The one I'm on right now is the first link there. Okay, so here's Terra4. Okay, this is weird. We don't get a market cap. But wait, this company, yeah, that's strange. Okay. When I go to the daily chart here, like it didn't look. It says 2020, but then when I skip here, like they just started trading again. Yeah, look at the volume. They just started trading. This is their only day in 2025 of being traded. That is so weird. Regulated solar and wind. Anyway, I wish I could give you more thoughts on them, but it looks like they just like I've never seen that. Hey, what up, German? Good to see ya. Okay, SRFM, I saw this one. Let's do it. SRFM, this is Surf Air Mobility. Oh, this is one of those startups. Okay, so I don't love this name. They're worth 190 million. So the whole entire company's worth 190 million. Okay, so they do have revenue. Actually, I thought this actually isn't the end of the world. They do have revenue, but unfortunately, the revenue did fall 15% year over year. So the revenue's down by 15. They're worth 190 million and they lost 30 mil, 20 mil. And yikes, they have a lot of liabilities and debt to pay off hold the phone though. This is interesting. Palantir Technology, Palantir stock owns 10% of the entire company. So Palantir is the largest shareholder. That is probably why the stock momentum up on these couple weeks here. That's the volume. And so some sort of company Palantir likes. Okay. Okay, so someone said, Wazah said Amazon. Yo, guess what, guys? The most recent stock I've bought in is actually a share of Amazon. Oh, hey, no way. Yo, done that. Thanks for all the roses there. If you got a stock you want me to look at, let me know. I think I saw a stock. Just type it in the chat and I'll check it out after this. But check this out right here. Here's Amazon. There's my little buy order. I bought a share on Friday in the middle of didn't exactly time the bottom, but yeah, we bought a share of Amazon on Friday. Here's what I love about Amazon. I mean, this is like an ETF in one. Amazon and Anthropic's project rating here to strengthen AWS cloud position. Let's see. Okay, anyway. Wait, what did that say? Amazon reduces stake or... Oh, Bezos. Oh, yeah. For the first time ever in history, Jeff Bezos owns less than 10% of the company. Here's how he's so rich. He used to own 10% of a $2.27 trillion asset. So he was worth $270 billion in his stock. But anyway, let me go over Amazon's actual numbers. A lot of people know them for their online stores, but they're really a cloud play. Their AWS business, their Amazon Web Services is the most valuable part of them. It brings the most of their bottom line, their highest net margin business. It's over $100 billion billion of annual revenue for them, largest market share. She used to break this down. Let me pull up the difference here. But yeah, this is an ETF in one. I mean, you get the online stores. Oh man, how far is it going to make me go back? So yeah, you get the online store business, the third-party seller, high margin services, the logistics hub, the AWS business. They're an advertising play, a subscription play, a book play, drone play, satellite play, robotics play, EV play, grocery store. They're a UPS and Instacart and Oracle Cloud all in one. Instacart, Walmart. I mean, this is like the company you want to own. So I believe in Amazon's story. I'm totally biased because I own shares, but I own shares for a reason. I think they're a great never sell stock. And if you look in the top left, this is called my buy and never sell portfolio. So that's why I bought them in here. So hey, done that. Thanks again for all the roses there. You said LAES stock. I know this is, oh, hey, we got to look at Nebius. What up, Pack One? And Will. What's up, Will? We'll look at VAC2. What up, Danny Saw? Good to see you, brother. So here's CLSQ. I think this is a quantum momentum name. They're worth exactly $1 billion. Let's see. What is this? CLSQ targets 2026 launch of quantum ASICs. Okay, cool. So it looks like they're finally going to have some sales. Reveals post-quantum chip roadmap. Okay, so they now have some roadmap, some clear path to actually selling a product. Because let me actually check this. Do they have sales right now? So yeah, the sales haven't been good. Why do they report cumulative? That's weird. But anyway, for the first half of this year, they only did $5 million of revenue. Look at that balance sheet. That has to have come from diluting you. Let's check. So yeah, whenever the cash and financing activity is positive, that means they either issued debt or diluted you by issuing shares. And the debt stayed the same. So that's how they beefed up their balance sheet, by issuing shares. And I don't blame them because they took advantage of this momentum. Let's get the future analyst expectations. Oh, wow. Look at that. So they did $4 million in revenue this quarter, big nothing burger. But look, next quarter, 13, then 14. So anyway, I don't love them. You're paying for a lot of future premium and future uncertainty. So, but interesting. Hey, Legend, no way, dude. No way. Shout out to the homie, or Legrand. If I've always been saying your name wrong, it's Legrand. Okay, ALEC. So Elector, let's check it out right here. So thanks again for all the roses there. Hope everyone's having a great Saturday. Yeah, by the way, if you want to hit the follow button, we stream every single day. I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you, DM you. Please watch out for people impersonating me. But check this out. This is Elector. They're worth $307 million. So the whole company's worth $300 million. Let's go see if they're worth it. So revenue, yikes. So the revenue this quarter was $7 million, but look at this quarter. It was $52 million. Wonder if that was like a one-time adjustment or something. So yeah, this is honestly why, he said ATEC. Okay. He meant a different stock. So another one that's weirdly also worth $300 million. So $380 million company at an literal all-time low. So if you've ever bought this stock, you're definitely down on your money. So let's see here. Excel Energy. Wait a minute. They really don't have any sales right now and aren't expecting any sales. Let's see here. So yeah, the revenue was $1 million. The revenue fell by 1.42%. So oh, you know what? We'll get back to that later. Legend. Don't. All right. Some cool dude said T-Rex. You know what? Actually, this company, I've looked into them. They're super interest rate sensitive. So T-Rex here, they make like wood floorings for houses. Like they make these cool wood. Yeah, this is what this company does. Manufacture of wood alternative deck and rails. So yeah, let's see. Where's the revenue? All the revenue comes from the US. As we know, this sector is really being hurt by the high interest rate environment. We go to the revenue. The revenue's up 3%, so not great. The revenue's up 3%, but that's again because the high rate environment. But luckily, they are still making a lot of net income every quarter. Look what happened back in 2021 and 2. They were printed. They're definitely interest rate sensitive and cyclical. So that probably explains why the stock has done so bad. The stock is the same price that it was in 2019. So you bought the stock 5 years ago. You're down on your position with no dividend either. So one thing I like about this company, though, is the amount they do on share buybacks. They bought back 1% of the company so far. Their decks are made from recycled plastics. I worked there as an intern. Oh, that's what's up, cool dude. Yo, nice. I've looked at that stock before, and the company I've kind of bought over them was Carlyle Group, ticker symbol CSL. Another one that kind of hasn't been doing great. And another one is Owens Corning. Again, definitely not the same to sector. Like, what is this company? What does Owens Corning do? Well, they do like roof shingles, and they also own Pink Panther Insulation. So if you've heard of the insulation company, Pink Panther, they own that. I need to get a nice 2% yield. Ooh, hey, givers, takers. Yeah, I appreciate that, my friend. Hope you're having a great day. Which one do you prefer, high return or high dividends? I'm a total return investor. I just want 10% plus a year. So yeah, I focus on total returns, the dividend plus stock price appreciation. That's why I stay away from like Verizon, for example. And no shame if you own this one, but here's the thing with Verizon. A lot of people look at this one and they're like, wow, look at Verizon. You get a 6.68% dividend yield. That's great. Basically 7% of my money back a year. But if we go to Verizon stock, it's literally the same price that it was back in 1997. So you bought the stock in 1997, you're break even. So let's look at ATEC here. ATEC, and then we'll get to AppFolio. For a second, what's up? Hey, what up, German? Good to see you, man. We'll look at AppFolio. My bad, Pack. We're for sure getting to Nebius after this. They have a huge Microsoft deal. Hey, what up, Warrior? We'll try to get to MYO. Don't worry. Try and get to Oklo too. Oklo is complete junk. I actually have a put on them. But here's Alpha Tech right here. This is a $2.2 billion. Well, anyway, $2.2 billion company. Let's go do some analysis on them. So, revenue from products and service. Well, what do they actually sell? What sector? So medical devices and medicine. So they're in the medicine and medical device industry. All right, let's see. Revenue is, this is good growth. Revenue's up 27 after it grew 25, after it grew 53, after it grew 68. Oh my goodness. They're on an absolute streak right now, but here's the bad news. And here's why I think the stock has been, kind of flat for a while. If we go to their actual balance sheet, they have a lot of debt, same amount of liabilities as assets. But if we go to their net income, here's the tough part. They're burning through like 30 to 50 million in net income a quarter. So it's not great. I love the growth here. We want to see them continue this growth, but the losses are actually worsened year over year. The losses worsened. They have a bit of debt. Revenue is expected to continue to climb higher. Yeah, every quarter they're beating on revenue. And they're missing on net income, though. That's the thing. We want to see them make more consistent net income, but the stock's done great. What app do you use? Yeah, hey, Musket, if you want to get this app I'm on, it's in the link tree in my bio over here for link there. By the way, this is a brokerage where you buy stocks. And here, it's actually, I just said I have a put on Oklo. I don't actually have a put. Well, check this out right here. If we go on this app right here, there's like this contest where if you like rank in the top 100, you like split a $200,000 prize or something. Oh, that's good right there. Look at that. Basically, I did it as a joke because there's no point. But basically, it closed out of the position for me. Oh, no way. Well, basically, I had an Oklo put right here, and the Oklo put did not do well. Well, there it is. Anyway, that's what I was kind of talking about. Looks like that didn't work out too well. Army's going to... So here's the thing. Well, let's look at Oklo right here. Why do I not like this company? Well, here's the thing. If you're looking for a nuclear stock, this is one of the worst nuclear plays out there. Check this out. If we go to this is a startup right here. If we go to the revenue, it says no data because they've never sold anything. I've never sold a product or a service, and they're years away from any sort of revenue. By the way, what is Oklo doing? They're making these SMRs, these small modular reactors. And if you didn't know, there's only 3 working small modular reactors in the entire world, and none of them are in the US. This is a complete story, proof of concept. I don't think they're going to have any revenue for the next 1, maybe 2 years if they don't get their permits in. But if you're looking for a real nuclear play, I've looked at all the nuclear stocks out there. Oklo, Vistra, GEV. The best one out there is actually Constellation Energy. This company owns literally 30% plus of all the US nuclear reactors. Literally the largest and best pure play for nuclear out there. So if you're looking for they have dividends, they do share buybacks, synergistic M&A. Out of all the nuclear stocks out there, that's the best one. Vistra Energy, VST, is like the second closest one. They only own like 3 nuclear reactors. But yeah, Oklo is... I don't get this is worth nowhere near 24 billion. 24 billion is insane on Oklo. So yeah, let's keep going here. But I love the nuclear industry. I'm a huge fan of nuclear. And the momentum's been insane because basically we've been signing executive orders to stimulate our nuclear reactors because we need nuclear to fuel our data centers and not burn coal like China is. Hey, Brob, no way, dude. Thanks for the rose. Got multiple grants. Yeah, well, that doesn't mean much. What is the symbol for Constellation? Yeah, that was CEG, Constellation Energy. Full disclosure, I do own 14 shares of them. I might be biased, but literally they're the largest market share by far for commercial and industrial nuclear. Just largest market share in general. They own 30% plus of all the nuclear reactors in the US. So let's look at APPF, AppFolio. Then we'll get to Nebius. Sorry, I'm kind of going slow here. I want to get to all these stocks here. Only try and spend like 1 minute on each stock here. But here's AppFolio. They have actually been momentuming down recently. Whoa. Let's actually check them out. I've actually liked this company because of their numbers. Let's see their net income down here. So yeah, look at that. They're easily making 30 to 40 million of after-tax net income a quarter. If you go to the revenue is up 19 after it grew 34, after it grew 25. So the revenue is really growthy. What about FCF, which is free cash flow? Yeah, look at that. 40 to 50 mil of free cash flow a quarter. And a really good balance sheet. Let's see, how much cash they got? 127 mil of cash. Well, wait, why'd their cash just deplete? Did they do share buybacks or something? Let's see. Yeah, they did 50 million a share buybacks this quarter and 100 million a share buybacks the previous quarter. I guess they were kind of poorly timed because I'm guessing the stock was much higher than where it is today, where they bought them back. But that's, if they didn't do those share buybacks, that would have just been added to their cash. They would have had 150 million more of cash. So Nebius right here, you know who owns Nebius? That's actually in the Nvidia portfolio right here. So just because Nvidia owns a stock doesn't mean you should. Hey, Isaiah, dude. Isaiah, no way. Thanks again for the paper crane in the hand heart. I really appreciate that. If you got another stock you want me to look at, oh, PG&Y. Yeah, we'll get to that one. Yes, sir. So here's Nvidia right here. Again, their portfolio. One of the stocks they own is Nebius. One of the reasons Nebius went up so much, again, they didn't report earnings on this day. The reason they went up so much that day is actually because Nebius secured a $17.5 billion Microsoft Azure cloud deal. So part of the Azure cloud servers will be with Nebius. Pretty cool. And again, let's go look at their actual numbers. This is, in my opinion, why even before today and before that deal, I liked this name because they were very growthy even before this deal. The revenue literally went from 15 mil to 100 million year over year, and 100 mil this quarter, and let's start expecting 265 mil in 2 quarters. The growth is insane on Nebius. So certainly overvalued here, even after the 8% dip, but the future sentiment is good. The worst thing for Oklo, yeah. Wonder what hey, it's Sean. No way. Thanks for the chili pepper, dude. I appreciate that. So Brob said RXRX. Oh no, dude, Brob, that's a bad company. But we'll go over them. Actually, a lot of people like RXRX because they're actually in the Nvidia portfolio. If we go to Nvidia's portfolio again, check this out right here. Another stock besides CoreWeave and Nebius Nvidia owns is RXRX. Here's why out of all the Nvidia stocks, this one's one of the more worser ones, in my opinion, I would stay away from, just because like they burn through an insane amount of money. Literally 100 to 200 million of net income a quarter they lose, and they're not even that growthy. I mean, the revenue is 19 mil, up 33%. So I just don't find any much value. This is one of the gene splitting companies, but I can't get over these losses, and they're diluting you every quarter to make their balance sheet not go down. I'd be really careful with that one. But Nvidia does have a stake in that one. All of this info is yeah, hey, it is Musket. Yes, sir. Yeah, hey, by the way, if you want to get this brokerage I'm on, it's in the link tree in my bio, very first link there. Legend said I'm shorting RH. Is that Restoration Hardware? Yo, I'd be very careful shorting this one, but this is one of the actually, some people might go long this one. This is one of the companies that own furniture. So very interest rate sensitive sector. But as we go into a lower interest rate environment, maybe I think this is just an interest rate sensitive sector. And if rates go lower, the stock sentiment might go up. It's a tough short. I'd be careful. I'd start very slow on that one. I don't do options of any kind. I haven't done a single option or a contract or short in over a year. So I'm kind of boring. I just buy and hold shares. So yeah, PGNY. I think this is one of the companies that help you with fertility. They were down 9% on Friday. What happened? Lower IVF prices. The The cost of GLP-1. Well, why did that hurt this company? They don't have weight loss prescriptions. So yeah, here we go. Fertility benefits services. Hey, that's growing nicely. It's up 10% after grew 12, after grew 36, after 37. So that business is booming. And also they're in the pharmacy benefits. Hey, that's also growing nicely. It's up 8 after 3, and they're beating on expectations every quarter. You know, the orange lines, what the analysts expect. They're beating every quarter on revenue, beating on net income, beating on EBITDA too. Wow. So I like the fact that they're net income positive, but they're in a bit of like a niche sector that it's like weird. I don't know. I mean, I like that what's the multiple? They're trading at 32 times net income. Maybe we do a forward multiple. All right, they're interesting. Yeah, they're on my watch list too. Oh, hey, try not to spam there. Hold up. All right. CEG has been great for me. Yeah, Looney, aren't you up like double on that name? That's crazy. Unknown Eater said thoughts on Novo Nordisk. So speaking of the weight loss prescription companies, here's Novo Nordisk. This is literally the company that owns Ozempic and Wegovy. So if you've heard of those weight loss prescriptions, Ozempic, Wegovy, this is the company that actually owns them. And unfortunately, the stock has not done too well. It's mainly because of the bear thesis kind of hurting them. Yeah, if we go to the revenue right here, 93% of all the revenue is from their diabetes and obesity care products, which again is Ozempic and Elon Musk is on Ozempic. But if we go to their PE ratio, basically net income multiple, why is it so low from the industry average? Industry average is 23. Well, they're at 13. Why? It's actually because they unfortunately lose their exclusivity for Ozempic in a couple years. And I think that's what's slowly been hurting the multiple the past year or two here. And there's just been some increased competition from Eli Lilly, Zepbound. So, but they're making great net income. This is why I actually think this one's worth looking into on nibbling. I wouldn't have it as a huge size position, but I'd maybe nibble on this one. They are European, or no, they're Danish. So actually we've converted the currency from DKK to USD. And if we go to the net income in USD, they're easily making 4 billion plus a net income a quarter. You get a 3.3% dividend yield. So yeah, that's your pure weight loss play. Zach said Coca-Cola. Hey, you know who actually owns Coca-Cola? It's actually the homie Warren Buffett right here. So yeah, we are able to, we can see Nancy Pelosi's portfolio. These are all super investors that literally have to make all their trades public by SEC law, and it just breaks it down for us. And you can like batch trade, follow them into them if you wanted to. But Warren Buffett loves the dividend plays. And if we go to his portfolio, he owns Apple, American Express, Bank of America. Then he has the higher yielding names like Coca-Cola, Chevron, Oxy, Kraft Heinz, Chubb. So here is Coca-Cola stock. I actually own Coca-Cola Consolidated, but this is a great, almost like recession resilient stock. You mainly buy this for the dividend. You basically get a 3% dividend. They raise their dividend every year, so that way it keeps up with inflation, but you get 3% of your money back a year in dividends, and then you're kind of just hoping for like 3% in stock price appreciation a year for a total 6 to 7% return a year. I don't expect Coca-Cola to outperform the tech-heavy S&P 500, of course, but I do expect this one to have a consistent like 6 to 7% returns a year. Buffett owns them. I guess Buffett approved my message. I actually own, if you look in the middle here, Coca-Cola Consolidated. This is the bottling company for Coca-Cola in North America. The stock looks completely different. This one's way more growthy and a much lower yield, though. This one has a 0.6% dividend, much lower. But I like it for the growth. So my SPGY gold producers and Oracle stop loss went out with a profit. I might be back in. Oh, hey, can you explain what you saw in Powell Industries when you were originally buying them? Hey, Looney, if you actually go to my YouTube video, I made a YouTube video the exact same day I bought Powell Industries. It's like 2 years old at this point, but I'll go over exactly what I went over in that video. So Powell Industries, first off, I bought this company at a $900 million market cap. Today, it's worth $4 billion. So that's why I'm up 4.2x on the company. I 4x my money on them. And I haven't sold a single share. I haven't trimmed at all on my Powell Industries because even though they're at all-time highs, even though I'm still up 4x on my position, they still only trade at 22 times net income. And that's real. So they really only trade at 22 times net income. That's because they're like 50% of the revenue does come from oil, gas, and petrochemical customers. But I just love them because they traded a low valuation and they make great net income. First off, look at this. They're easily making 40 to 50 mil in net income a quarter. You get a 0.3% dividend. Again, when I bought it, the dividend was over 1%. So I'm getting a 1% plus dividend, but they have a super low payout ratio. They made 48 million in net income this quarter. And also Powell Industries has no debt at all, but they made 48 million this quarter. And the dividend literally only cost 3.2 million. So their dividend cost nothing. The dividend literally cost nothing, 3 million a quarter. And if we go to the cash on it as well, they have $433 million of cash. That $433 million of cash literally made them 4 million of interest this quarter. They made more interest this quarter than the cost of their dividend. Anyway, I just like Powell Industries. Not trimming my position on them either. Yeah, hey Isaiah, thanks for that. Had to mute him. Hey, actually, what up, Isaiah? I'm actually gonna give you a mod. So I only have like 2 mods, and appreciate that. All right, so just if you ever just mute someone, never like block them or anything. So Isaiah, or remind me to look at Dutch Bros. I wanted to get to this stock though. Unfortunately, Tom, I cannot cover DKNG just because of the sector that it's in. Last time I covered that stock, our TikTok stream got taken down. Hey, thanks for the October. Hey, happy October. Happy Saturday, guys. So here's Marriott Vacations Worldwide. So yeah, the Marriott, I love staying there. Hotel chain, but unfortunately, the stock has not done too well. Marriott is the same price that it was back in 2014. So the stock has been flat for a while. Let's see the dividend. Oh, so you're mainly buying this for the dividend. Look at that. You get a basically 5% dividend yield there. So that's really good. But let's see. Vacation ownership, that's up 10% year over year. Yeah, they're actually making consistent money, easily 60 to 50 million in net income a quarter. They have a bit of debt, but let's see how much the dividend costs. So they made 69 million in net income this quarter. The dividend cost exactly 50. Whoa, wait, it changes. That's weird how it changes every quarter. Oh, because basically if you average it out, the dividend costs basically 28 million of net income a quarter, so they can afford the dividend. Gotta be careful there. How do you see portfolio? Wait, Jose, are you talking about this right here, like the super investor portfolio? You just go to the Insights tab on Moomoo. Or you just go to Discover, and you go to Insights. Yeah, there's a lot of cool features about this app right here. Yeah, hey, if you're ever looking for new stocks, they have all these cool watch lists here that you can like sort through and like look for new stocks. Or if you're interested in certain sectors like safe haven assets like oil and gold, or AI medical concepts, Stargate, the Red Sea ship. I don't know. There's so many cool sectors that you could, robotics companies. We looked at a lot of these, like Symbotic's great. Anyway, let's keep going here. APLD. You know what? Let's go back to APLD. Speaking of the super investors portfolio, we actually go back to the Nvidia portfolio right here. Oh, then we'll look at KVU after this. I'm up well over 100% on, nice, Looney. I wouldn't even trim that one. Like, I would just hold that one. Or maybe, I'm not trimming, but maybe trim a slight bit. But okay, so back to the NVIDIA portfolio. Their largest holding is CoreWeave. So as we know, NVIDIA loves CoreWeave, but their second largest holding is actually APLD. And if you're wondering what is this stock, this is a data center hosting company. Let's see, is there any news around here? Signs $11 billion CoreWeave deal. Yeah, so here's the funny thing. NVIDIA owns both CoreWeave and APLD, and shocker, they both go into a huge partnership. So was that orchestrated by NVIDIA? Probably. They've both benefited from being in the NVIDIA ecosystem, but they just reported numbers. If we go to their chart up here, the reason they gapped up that day is actually because it was earnings day. If we go to the analyst expectations, analysts expected 45 million in revenue, so they expected 45, but they reported 64 million. They didn't just beat on the revenue, they also beat on the net income losses. They were expected to lose 13 cents of EPS, they only lost 7. So yeah, they are still losing net income every quarter, but it's really this growth that investors have been happy with. The growth beat expectations. They're a data center hosting company. Okay. Let's see here. Would you do a video on all the cool features on Moomoo? Yeah, hey, by the way, it's like a month or probably 2 months old now at this point, but if you want to see all the super cool features, if you have this brokerage I'm on right now and want to see all the super cool features and stuff I don't really cover on the stream, it's also in the link tree in my bio. It's like the 5th or 7th link there. It's like how to use Moomoo, all the cool features. There's a lot of cool stuff in here. Like a lot of people don't even know, like the interest rate cut probability tracker. Like we can see on the October 29th meeting, there's a 99% chance of a 25 basis point cut. Now, in the December 10th meeting, a 95% chance of a 50 basis point cut. The FOMC dot plots project a 3.63% interest rate by end of 2025. There's so many cool features on here. And yeah, you can see like anywho, let's keep going. Someone said, oh, yeah, I wanted to get to KV right here. So this is the company that you've probably heard of in the news right now. Oh, yeah, remind me to look at Dutch Bros too. So KVU. So this is the company that owns Tylenol. And there's recently been that Tylenol warning label thing on there. Don't take if pregnant or whatever. But also there's some new news around this company. I remember this company used to be owned by Johnson & Johnson, and Johnson & Johnson spun them off with some of their brands. And Johnson & Johnson faces UK lawsuit alleging its baby powder causes cancer. So Johnson & Johnson baby powder, it's owned by this name, so that's not great. Even if, like, before the Tylenol baby powder news, would I have bought this stock? No, it's not too great of a company, I think. I mean, they own some cool brands like Neutrogena, Band-Aid, Listerine, but I mean, they're just not too growthy. Revenue's down 4% year over year. I mean, they're just not growing. And also, Johnson & Johnson gave them more debt than I would have liked, and they also have not been retaining this net income. So check this out. If they made 420 million net income this quarter, so they made 420 million of net income this quarter. Well, shoot. I want to pull up the cost of dividend. The cost of the dividend is actually 400 mil a quarter. Here we go. It loaded. Thank you. So yeah, if we go right here, right there. Yeah, the dividend cost 393 million of revenue a quarter. So yeah, they made 422 mil of after-tax net income, but they only retained 20 million of that. And notice last quarter, they couldn't afford the dividend last quarter. They couldn't afford the dividend the previous quarter before that as well. So that one's a tough one. Okay, so what's Tuesday took you down? Let me know though. Yeah, hey, no problem, Tom. I appreciate that. If you get another stock you want me to look at though, Tom, let me know. I got you. Improvement said, look into OPXS. I learned it from a SWAT guy. Government contracts will definitely go up 12%. Oh, they're actually on my watch list already. Let's see. So they are, they're at an all-time high. Whoa. So hey, first off, if you own this one, congrats. Yeah, hey, Jose, he said, do you have a referral link for Moomoo? Yeah, hey, by the way, if you want to get this brokerage I'm on, it's called Moomoo. I do have a referral link. It's in the link tree in my bio, the very first link there. So if you go and deposit $100, we'll both actually get like some free stocks. So yeah, I'd appreciate that. This is my favorite brokerage to buy stocks on. Yeah, if you like stocks and are looking for an app to buy it on, I like this one. Lowest fee brokerage, no fees at all, no commissions at all. Okay, so here's, it's cheaper than Robinhood, but here's Optex Richardson is their main business. Look at the growth here. Again, it's only a couple mil, but the growth rate is so consistent and so high. It's up 50% after going 52, after going 15. So that's really growthy. Let's see down here. Total sales. Yeah, look at that. Revenue's up 22 after going 26, after going 16. So very consistent revenue growth, and they're actually net income positive on that. That's the crazy good news. They're actually making nearly 1 to 2 million of net income every single quarter. They also they're deleveraging their balance sheet. I mean, everything here is headed in the right direction. Cash flow's positive. I mean, this is great. I mean, what's the market cap? Out of only 100 mil. I'm going to re-add them to my watch list. Out of all the exactly $107 million market cap companies out there, I think I'm going to go with the one that's actually making $1 million of net income a quarter. That's actually, profitable and growing. So Luffy said ETN. What up, Luffy? So you know what? That's Eaton. They're actually another electrical component company. And actually, I looked into Eaton. I actually bought Powell Industries over them. So these stocks actually kind of rhyme together. Like obviously Powell is a little bit more growthy, but as we can see, like whenever they go up and go down together. Yeah, I love both of these names. Let's go analyze Eaton right here. So electrical infrastructure company really benefiting from AI. They're also an aerospace company, I think. Yeah, look at this. Their aerospace and defense revenue is 15% of all the revenue. So that's really interesting. The fact that they're in their first ever $1 billion revenue quarter. So that's good. Let's see the net income. Yeah, look at that. Nearly $1 billion of after-tax net income a quarter on Eaton. This is great. Did fall 1% year over year though. Is that real? No, it wasn't. So they had a one-time adjustment either this quarter or the same time last year to make it look bad. But yeah, the profits grew year over year. The revenue's up 11. I really like Eaton. And if you buy the stock, you get an over 1% dividend. Pretty cool. So USUS said Sprouts Farmers Market. Hey, that's actually one of my big losers down here. What app are you using? Yeah, hey, TXI. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. And you're on the YouTube stream. It's also in the link if you're on the YouTube stream, it's in the link in the description. But this is a different brokerage I'm on right now. But here's Sprouts Farmers Market. This is a healthy grocery store. I do all my analysis on this brokerage right here because it's the best one. You can buy stocks on any app. You can buy stocks on Robinhood, Webull, but you can't actually like do more than that. Like you can't go and research the company, see their numbers, valuations, where did the revenue come from. Like, this is all you get. You get a few news articles, and that's it from Robinhood. So that's why I like this brokerage right here. So anyway, Sprouts Farmers Market, this is a great growing, healthy grocery store. And that's why I think they have so much pricing power. If we go to the sales, this is what's great. I'm not just recommending Sprouts Farmers Market because they're well off all-time highs. I'm recommending this company because they're a good, high quality, sound stock that I want exposure to. So if you go to the revenue's up 17 after it grew 12. So the revenue's at a record. Revenue's up 17, but the net income is up by 40. What does that mean in English? Basically, it means they're expanding margins. Like, if you look at Kroger, they're lucky to have a 2% net margin. Costco's lucky to have like a 3.5% net margin, but they are well above the industry because they sell more grocery, healthy-oriented stuff. They only trade at 22 times PE. So that's my way to get exposure to grocery stores. Stefan said DEFT. Hey, I think that's DeFi Technologies, not a great company. Well, let's just go relook at their numbers again. So yeah, they're only worth 780 million. Well, they're worth 780 million. Let's see here. So, Valor, what's that? I don't know. Well, let's go to revenue down here. So why is the revenue negative? That's weird. They're in a weird industry because the assets to liabilities, capital markets, Solana reserve concept. Yeah, I don't know about all that. It sounds like some crypto thing. Let's see, are this is weird. I don't know. I wish I'd give you more thoughts on them. It sounds like some sort of like crypto play. I mean, they're not terrible, but I wish I'd give you more thoughts on them. Sorry. I mostly use Coinbase. Oh, hey, yeah. Hey, what up? Catherine said NAK, please. What is this one? Northern Dynasty Minerals. A $1 billion company. So yeah, I think this one's really just been momentuming up on the whole rare earth mineral craze. They still have no revenue, but they should have a good, they don't have a good balance sheet. They used to have like no debt, but notice the liabilities are like creeping up. We just go to net income. Yeah, so when you lose net income, the money has to come from somewhere. So the liabilities have been going up, assets have been trending down. There's no revenue either. So, I don't know. Out of all the rare earth mineral plays, I don't know about this one. I probably would like LAC or like an MP Materials better. But I don't know. I just don't like that these net income losses hurting their balance sheet. But maybe with this new, the stock is rallying up obviously on something. Yeah, by the way, the government took away, if you go to ABAT, one of the reasons why a lot of the rare earth mineral plays were down is because the government is actually revoking grants. They're taking away certain grants for some of these rare earth mineral projects, which is so weird. So that's why ABAT really led the falls there. Looking for the best high dividend REIT. Any suggestions? Yo, Gregory, I've looked at all the REITs out there. You name a REIT, I know it. I've looked at all of them. The best REIT out there. I love some of the I love well towers, CTRE. I love self-storage, like public storage. But the best REIT out there after doing a lot of research is Iron Mountain, in my opinion, IRM. And I do own 11 shares of them. They have an only 3% dividend yield, but they have such a great, dividend rule. They'll never let their dividend payout ratio get out of the mid 60s. So you get a 3% dividend yield, their payout ratio is in the mid 60s. And you get exposed. This is a data center REIT right here. They've actually outperformed like any other REIT out there, and I think they'll continue to as well. So yeah, there's Iron Mountain. All right. Oh yeah, Dutch Bros stock. Hey, this is another cool one. Don't forget Big Bear. What about TENB? Well, we'll look at TENB. RZLV, bro, I've asked many people, but no one looks into it. Yeah, hey, RZLV, nothing really good in that name, really. I think that's like Resolve AI, some like startup. But yeah, here's Dutch Bros right here. We'll maybe get to them after this, but this is Dutch Bros right here. This is like a competitor to Starbucks. I think a much better Starbucks play. Just because Starbucks is experiencing so many issues right now. They've unsuccessfully expanded shops into China. Well, let me not focus on Starbucks. Let me focus on Dutch Bros right here. So company-operated shops, that's 91% of all their revenue. So their company-operated shops revenues up 28% year over year after it grew 33, after it grew 37, after it grew 67. So they're on a growth streak. Mainly a lot of this is just from opening up new stores. But the part I love most about Dutch Bros is actually their franchise royalty revenue. So if you go spend $100 at any Dutch Bros, $5 of it goes back to them as a franchise high margin royalty. So yeah, they've been beating on expectations every quarter on revenue and on net income and on EBITDA. So they've been triple beating quarters. But I think if you're wondering, why is Dutch Bro struggling so much recently despite their good numbers? Like, look at this net income. He's most profitable they've ever been, highest margins ever. Why is Dutch Bro struggling? It's because of the whole industry. We go to Starbucks right here. Starbucks is not doing great. They're the same price as they were 6 years ago. And there's some other ones like Jack in the Box. Yo, this one's just at all-time lows right now. Wendy's, yo, RIP Wendy's stock. There may be a day where we not see any more Wendy's anymore. Wendy's, look at that. Wendy's is the same price as they were back in 2008. Yikes. Okay, so yeah, I do like Dutch Bros though. Looks like they're in a good position. So Ash said TENB stock. This is Tenable Holdings. Looks like they just IPO'd not too long ago. So the stock is the same price that oh no, they didn't. No, never mind. They've been public for 7-8 years. Let's see why they're like, if we look at their stock, like why is the thing like doing so bad? Let's find out why. So revenue's growing. The revenue's up 11 after it grew 13. So sales are up, but they are losing some net income. 14, 22, but they made net income that quarter. They have a bit of debt, 1.3 billion of debt, but the cash from operations is growing like crazy. I do like the sales growth there. Hey, Dr. Fly One or Dr. One Fly. No way, dude. For all the roses. Hey, what's up, man? You got a stock you want me to look at? Let me know. I got you. We'll check it out there. Oh, Marcus, what up? We'll try and get to Pepsi as well. The Tenable Holdings, what do they even do? Let me see here. So, cyber exposure, cybersecurity. So, looks like a cybersecurity play. Maybe they're just being out-innovated by the, bigger names. But they're making, I mean, they're losing net income every quarter, but the revenue is growing. It's not the end of the world, but I don't know. 3.5 billion market cap might still be too. That's probably reasonable for them. Key investments since gold price have been surging. I think financial will get better. Oh, hey, nice. Yeah, hey, no problem there, Gregory. Henrik, what up? He said BAC, Bank of America. Oh, then we'll get to Zeta or Pepsi. We'll get to all these here. Sorry. So actually, speaking of Bank of America, you know who owns Bank of America? The homie Warren Buffett. So here's Warren Buffett's portfolio. He owns a lot of Apple. Bank of America is his third largest holding. It's 10% of his portfolio. And this is a great bank and a great dividend growth stock. So look at this. You get a 2% dividend. They raise their dividend every year to keep up with inflation. Yeah, consumer banking, global markets, global wealth and investment management. This is that high margin business where they manage assets and collect that AUM fee. So let's go to their net income right here. Yeah, look at this. This is their after-tax net income, easily 6 to 8.5 billion in net income a quarter. It was a record this quarter, and they just share that to you, obviously with dividends. Only a 31% payout ratio, a lot of room to raise their dividend, and they're also doing tons of share buybacks. Here's how you can tell. If you go to the net income's up by 22. But the net income per share is up by a freaking 31. That's because of the share part of the ratio went down. Again, the net income growth and the EPS growth should always be the exact same, but this only adds back the share. This adds in the share buybacks or share dilution. Pretty cool. I'd happily I'd just buy and hold them and never sell them. Absolutely. So, let's see here. PepsiCo. Yeah, speaking of more food stocks right now, Pepsi's interesting because they just took a 6% stake in Celsius stock, CELH, and IRT options. Hey, thanks for the roses there. I appreciate that. So yeah, PepsiCo is mainly a dividend play, kind of like Coca-Cola. If you go to the dividend, you get a 3.6% dividend with PepsiCo. So 3.6% dividend. But if we go to the stock, the reason, they're the same price as they were in 2021. They've been flat for 3 years. Why is that? It's because they haven't been growing too much, and they kind of just answered growth concerns with the new Celsius acquisition. But check this out. The revenue is only up 2.6. Last quarter it was up 1, and then it was down 1. So they're just low single-digit growth, or sometimes even negative growth. So we really just want to see the growth come back, but they make great net income. 1.5 to 2.5 billion in net income a quarter, then you get the nice yield. Pretty cool. Again, I don't expect Pepsi to outperform, the tech-heavy S&P 500 in the long run. Yeah, hey, stated, we literally just looked at DEFT, so yeah, there it is on the search history. So sorry, we're not going to look at that one probably again. But if you have a different stock you want me to look at, let me know. So yeah, here's another grocery store, or not grocery store, food play kind of being hurt. Also, I think Chipotle might fall a little bit lower, but this one is one you like to put on the watch. It's one of the better best well-run restaurants out there. But the reason they gap down so aggressively on earnings and then just continue to bleed down after is because even now, they still trade at a pretty high valuation. If we go to their PE ratio, which is net income multiple, Chipotle trades at 37 times net income, while the industry average is 28. So they're significantly higher than the industry. And it's okay to have a high PE. It's okay to have a high PE as long as you're high growth, but the reason they're gapping down so aggressively is because they're missing on their growth expectations. And as a high PE company, that's not good. So yeah, the orange line's what the analysts expected. They expected 3.1. They only reported 3.06. They missed on revenue and net income this quarter. So if we just go to their total sales, the revenue's only up 3%. 3% revenue, that just barely beats inflation. 3% revenue growth. So revenue's up 3, but your net income, your after-tax profits are actually down by 4, meaning their margins did fall as well from input costs. But again, it's not just Chipotle that's experiencing this, so I'm not just picking on them. It's the whole industry. Like Wendy's, all-time low pretty much on Wendy's. 2008 low on Wendy's. 2007 low on Jack in the Box. All-time low on donut or Krispy Kreme stock, which is ticker symbol donut, DNUT. So yeah, Krispy Kreme is only worth 550 mil. RIP. Okay, so let's keep going here. How long have you been trading for? Since the day I turned 18. So, but some of my portfolios I made a lot later than that. So Fu, what up? He said SPT stock. Bro, you don't need dividends at the age of 20. Well, hey, you're right. I don't need them, but I don't like the high yielding names. I go with the dividend growth companies. And actually, a lot of these dividend growth companies, someone say I don't need dividends. My dividend yield is less than 1%. If I buy the S&P 500, I'd make more dividends than I make today. I don't know what I'm trying to explain. I'll do that later. But anyway, if we go right here, Sprout Social, I've never heard of this company, but if we look in the top right there, they're only worth 618 mil. Yikes. All-time low. Even below their 2020 dip and IPO dip, all-list time low. Yikes. Let's see if we can figure out what happened here. So the revenue's growing though. The revenue's up 100, or it's up to 100 million, up 12%. But they're losing 12 to 15 mil a quarter. What's the market cap again? Oh, so here's probably why investors aren't too happy. Hey, Tricks boy, what up, dude? I appreciate that. So if you look in the top right, the market cap, they're worth 618 million. So you buy a company worth 618 million, but you're buying a business that loses 12 to 15 mil a quarter, or 75 mil a year. It's not the end of the world, but that's they lose over 10% of the entire company's market cap in net income a year. We really want to see them start to narrow those losses. Yeah, hey, by the way, if y'all want to hit the follow button, we stream every single day, sometimes twice a day. We just cover stocks. I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never, ever follow you. I'll never DM you. Please watch out for people impersonating me. Only thing I do have is a YouTube channel. By the way, the number one way to support me is just subscribe to my YouTube channel. It's just called Nathan Robert. It's also in the link tree in my bio. But yeah, I'm trying to build on my YouTube channel. I'm also streaming on there, so if you miss anything, you can replay it. And yeah, so let's keep going here. What is BME London? Is that a ticker symbol? BME? What up, Mike? Let's see here. Rage dump your entire portfolio into SLDP. What is SLDP? Solid Power. Hey, they're on my watch list, so there actually must have been something I saw in this company. Let's see. So let's go look at their numbers. So they're a $1 billion company, very low market cap, but they've been beating on expectations quite nicely. Look at that. Analysts expected 5 mil. They reported 6 mil. Again, very small company, but very small market cap. Actually, I don't know, actually. Why did I add them to my watch list? Yikes, because this is not good. Look at this. If we go to their net income, they're losing 25 to 30 mil a quarter. Whenever you lose net income, that number has to come from somewhere. So every quarter, their assets slowly decline. They have no debt, though. So the good news, they can easily afford these net income losses right here. Look at this fortress balance sheet. But revenue's up 27. What are analysts expecting? It's expected to fall to 3.5. Maybe I think they're going to have a nice beat on expectations, and maybe when they beat on expectations, they'll gap up on earnings like they have been. So anyway, hopefully that was helpful. I don't know. Okay. What is your total return overall? Well, hey, it depends on the portfolio. If you look at this account right here in the very top middle, my open profit and losses were up $11,000 all time in here. If we go to we have so many different portfolios. I just love being fully transparent, by the way. Yeah, I can give you a quick portfolio update, then we'll get back to the other ones. But yeah, this is our Webull risk on portfolio. If you look in the top left, there's also our open profit and loss. This portfolio, it was 10,000. We're up 3. We've definitely underperformed the market. We're only up 19% all time in here. So yeah, we have this portfolio as well. And then I have a goal with each portfolio. Our Moomoo account, if you look at the top, it's called our buy and never sell portfolio. Our Webull is kind of like our risk on account where we buy a lot of risky names like AMD, Robinhood, SoFi, Reddit. And then we finally have our dividend growth portfolio. Again, luckily, all three, someone's been saying you're in dividend stocks. Actually, all three of my portfolios individually have outperformed the S&P 500. So in this portfolio, we're up 17%. If you look in the top left, it's called our dividend only. Every stock in here pays a dividend. But as you'll notice, all these are dividend growth companies. Meta, Google, McDonald's. Well, McDonald's is not too growthy, but Constellation Energy, United Rentals. So, and we have a Roth IRA as well. So anyway, there's our portfolios right there. Okay. Let's see. Hey, we just looked at KVU right there. I don't love them. Do you ever use trailing stop losses? I do, but just not now. Oh man, hold on here. Okay. Dude, I gotta block this guy. Okay. All right. All right. Let's see here. Starbucks. What up, Con? He said Starbucks right here. And try not to spam in the chat there. So here's Starbucks. Again, this one's seeing a huge struggle with their margins. Also, I think they're considering selling off their China business. Yeah. Carlyle and Boyu Capital leads executive talks for Starbucks China stake, or a stake in that. Oh, well. But yeah, major investors urge Starbucks to resume union negotiations. Yeah, Starbucks has a big union problem. I forgot about that. Another reason I wouldn't want to touch this company. Yikes. But yeah, if we go right here, we can see their number of stores. Check that out. They have 41,000 stores. Let's see, where's China in here? Yeah, China, they've been expanding into China. It's growing to a bigger portion of the revenue. But here's the bad news. We go to the revenue's up 3%. Yet it's still not great growth, barely beats inflation. Look at that. Negative. It's all the time low single digit growth. But this is not the bad part. I actually like that the revenue's up. So revenue's up 3.7, but the net income is down by 50. And that's not some one-time adjustment either. That's real. So they're still made... Last quarter was even worse, but they made $558 million in net income this quarter. Remember that number. Someone's saying hey, they still made $558 million in net income a quarter. No, they didn't, because remember, Starbucks also pays a dividend, and the dividend literally cost $693 million. So they couldn't afford the dividend this quarter or last quarter. They actually had to either pay off that dividend from their cash pile or take out debt to literally pay the dividend. So I think the dividend is at risk. They're seeing input costs from coffee. So I think it's a tough stock to buy. And I can totally understand why they've been doing so bad. They're honestly not doing as bad as they would have been because they're kind of being propped up from their new CEO. All right. So I'd rather buy a Dutch Bros. Same industry. Yes, same industry. Dutch Bros is actually expanding margins. They don't have a union problem. I actually, honestly, best play is McDonald's. You want to get McDonald's. How do you invest or trade? I mainly just buy and hold great companies for the long run, then never sell. So yeah. Prime said BMNR. Yeah, hey, that's your Ethereum play. I wish I could give you more thoughts on them, but this is literally a company that just owns Ethereum, and that's all you trade the market cap off of, their NAV of their Ethereum. I don't see, honestly, people like MicroStrategy and BitMine, but I just don't see the value really. It's literally just a Bitcoin or Ethereum proxy. So yeah, that's Ethereum proxy. So yeah, hey, is this pre-recorded? The Flavor Factory, it is pre-recorded. Yeah, you can see the time in the top left. Okay, but no, yeah, we are live right now. Oh, Salesforce, yo, should we get to Salesforce too? They're the number one CRM play. Amazon uses Slack, which that was the best acquisition ever by Salesforce. Salesforce acquired Slack back in 2021. I still remember it. But yeah, here's the revenue. I love how diversified that they are. Again, the reason they're struggling right now is because they're really kind of being hurt by the AI thesis, the white collar job market slowdown. And their new, what's that called? Agent Force is kind of a ChatGPT wrapper. I saw it, but I love their other assets like Slack. Check this out. Their services is 24, sales are 22, platform another 20, integration analytics 15, 13, and they're super profitable. They're easily making 1.5 to 2 billion of after-tax net income a quarter. The FCF, which stands for free cash flow, they make all their money in Q1, 6.3 bill of free cash flow, insane. You also get a small dividend with this 1.67, but I think they're kind of like Adobe. They're struggling with Adobe, but I would nibble on Salesforce. I wouldn't make it a meaningful size position, but I nibble on them, being very careful. And that's what I'm kind of doing right now. I'd love to make Ferrari a bigger size position, but I'm nibbling, especially in this environment with how tough valuations are. Yeah. Bayo said what app is it? Hey, by the way, if you want to get this app I'm on, this is actually a brokerage where you buy stocks on. It's in the link tree in my bio, very first link there. Full disclosure, it is an affiliate link, so if you go and deposit $100, we'll both get some free stocks. Statistics show that dividend-paying companies perform better than non-paying dividend companies. Oh, hey, that's interesting. Probably, I think this is the kind of dividend stocks I stay away from. Like, I don't want the companies that literally are suffocated from a payout ratio. Think UPS, think Verizon, think Texas Instruments. Texas Instruments is real bad, but like a lot of people look at, these are the dividend stocks I avoid. Like if we look at the dividend, you get a 6.67% dividend and it's sustainable. That's the thing. This dividend is safe. You really get a safe 7% dividend. But here's the thing with Verizon. Verizon stock is literally lower than it was in 1997. You bought the stock in 1997, freaking 28 years ago, you're down on your money. So I specifically, and here's my dividend only portfolio, every stock in here pays a dividend. If you look at the top left, it's called dividend only. I look for the dividend growth companies that leave them so much room so they can invest in companies, do share buybacks, do M&A, all without having to dilute you. Because whenever Verizon or these companies want to see an opportunity they want to pursue, they have to dilute you, either through debt or shares. I've just seen it a million times. Hey, what up, Ryan? He said AVAX. Let's check it out. Oh, wait, that's a crypto. Hey, we don't really look at crypto on here, but hey, we can trade it and buy it on here. But hey, there's no numbers for me to look at there. That's kind of a cool feature about crypto, though. There's no net income or net margin. You have to worry about them missing on every quarter. And hey, shout out to Isaiah, dude. No way. With the roses there. Before we get to mRNA, thoughts on mRNA if they become profitable like AbbVie? They're like so different from AbbVie. Like AbbVie is a million times better than mRNA, even still. But actually, let's look at Moderna first. So yeah, if you're wondering why is this stock, I don't love this one. Is this the one that loses like $1 billion a quarter? Yeah, it is. So yeah, I really don't like this one. Yeah. So look, if you go to their net income, they're losing $1 billion nearly of net income a quarter. That number, these losses have to come from somewhere. So you go to their balance sheet, the assets slowly drip down every quarter because those are tough losses. And if you go to the revenue, there is no revenue anymore. Look at these year-over-year declines. It's down 41%, down 35%, down 65%. So this was huge in 2021, obviously, when there was the COVID vaccine they were selling, and the pills, but completely different. But AbbVie is like the best healthcare company out there. I'm talking like if this falls to 200, I'm like all in on AbbVie. Like the actual most sustainable dividend growth company out there, 3% yield that they can easily afford, and it's going higher. Okay, so let's go to Delcath Systems here. So this is a company I do own in my Roth IRA. Again, I'm going to go over this company, and you guys are going to be impressed with their numbers. You're probably going to want to take a stake into this stock. But as much as I love this one, and actually, I'm going to try and not sell you on this one because I really don't like recommending these kind of stocks ever. So look at this. Here's the max chart. They're down 100% all time. And as much as I love them, I put $150 into them. So they're worth $200 today. Basically on Friday, they had some successful results, but check this out right here. Here's why I decided to buy Delcath Systems. Again, we just looked at the max chart. Normally a stock I never recommend, but look in the top right here, the market cap. This whole entire company is worth 420 mil. So remember that in the back of your head, the whole entire company is worth 420 million. They literally have no debt and 81 million. That's a huge safety net. I mean, gives them tremendous freedom. They have 80 million of cash and no debt. So literally almost 20% of their market cap is their cash on hand. So that's crazy. But look at this revenue right here. This is insane, the growth here. The revenue went from 7 mil to 24 mil. And here's the thing again, I'll recap. They're a $420 million company with $80 million of cash that's super growthy with their revenue. That's net income positive. They made 2 mil, 1 mil. They lost 3 mil this quarter, but they're actually now making consistent net income. And also because they have $80 million of cash and no debt, they're literally making, they used to pay interest. If we zoom out, look at this. They were paying negative interest because of the high interest rate environment. But now since they've risen so much cash, they have 80 million cash and no debt, highest cash ever. They literally made 650,000 of interest this quarter, 600K last quarter, 300K last quarter. So they're literally making almost like $1 million a quarter in just interest. And that's so significant when your whole entire company is for 400 million. Someone said the PE ratio is insane. Yeah, it's actually, again, they just got net income positive. Again, the PE ratio is just the net income per share multiple. And basically, they just got net income positive. So you really want to do a forward PE on a forward PE ratio. This could be trading at, honestly, like 5 times net income right now, or like 2 years out. I mean, it's crazy. And again, as much as I love that stock, and if someone out there is like, I'm buying that company, I love it, please, please, please don't make it a meaningful size position. I mean, I put $150 into it in my Roth IRA. It's the kind of stock that could also just go to zero. I mean, it's already at zero. But anyway, I think for those reasons, the 80 mil of cash, the growth, the net income positivity, the interest, I like them. Okay, I don't know I'm a numbers person. AbbVie over Eli Lilly long term. What are you saying? They are both. That's a great question, Isaiah, and I've asked myself that question too. The real answer is just like both. Like both are equally like on the one hand, like AbbVie's smaller, and like Eli Lilly is worth $750 billion. Like for you to double your money, they have to be worth 1.4 trill. Like but they're both like, everything's headed in the right direction on both. If you're wondering, what does Eli Lilly do? They're another company that sells a bunch of different prescriptions, just like AbbVie does. AbbVie has Skyrizi, but Eli Lilly has Mounjaro. And check out the growth here. This is what, in my opinion, justifies the crazy multiple and stock price appreciation on Eli Lilly. They literally created this product in 2022. The revenue was 16 mil, and ever since then, it just hits a new record every year, every quarter. So where it's now 3.8 billion of revenue just this quarter. It's up 112 after going 212. So the revenue's at a new record. And also, that's just one prescription. They also have Zepbound. This is their new weight loss prescription to compete with Ozempic. This is so growthy. They created this one in 2023. They just can create prescriptions and they just sell. I mean, look at that. It's at a new record this quarter. 2.3 bill, up 350%. They're just an extremely growthy company that's not just growthy in terms of the revenue, but their actual profits up 7 billion. That's crazy. So I love Eli Lilly. And I love AbbVie. They're both great. They're both should be part of a portfolio if you want healthcare exposure. Humacyte is a good small cap. Hey, what's the ticker symbol? I think I've heard of them before. He spoke on that on the watch list. He likes some. Oh, wait. What stock was he? Oh, Astera Labs. Yeah, hey, Jace, I love Astera Labs. Yeah. I'm a long-term investor, but never got into McDonald's because I felt more and more people are eating healthy, so I was nervous. You know what? I always thought that too, but the market has really responded to like plant-based meat. Beyond Meat's at zero. That other like Impossible Meat, like those stocks are at zero. It really just feels like honestly, McDonald's will not outperform the market in the long run. But here's what I love about McDonald's. This is really a real estate royalty company. They own the land under 90% of all the stores. So even when we're in a recession, McDonald's, the parent company, the corporation, still collects rent every month. And they also collect royalties. If you go spend $100 at any McDonald's, even in China, right? I think the royalty is higher in China because they don't own the land there. They changed up the model. But if you go spend $100 at any McDonald's, $4 of it goes back to this company. It has literally a royalty, a sales and marketing royalty, they call it, because every McDonald's franchise out there benefits from whenever McDonald's does commercials and do that Minecraft meal deal collab or the Monopoly collab, whatever. So they take a percent of all sales, and that's why they're known as, I call them recession proof, but recession resilient. In 2008, they didn't dip. Look, in 2008, there was no dip. They actually, they're genius. They acquired a bunch of land, cheap land in 2008. I could talk all day about how McDonald's is a great company, but I don't expect them to outperform the tech-heavy S&P. You should get 2%. Here's how I collect my math here. I get 2.5% dividends, 2% share buybacks, and 2% same-store sales growth from them opening up new stores. So I should get 7 to 8% total returns a year there. Okay, Eli Lilly versus NVO. Yeah, Eli Lilly is a much better company because NVO, 96% of their revenue is only their weight loss prescription stuff, but Eli Lilly, only 20% is their weight loss prescription. And one of the biggest risks on NVO is Eli Lilly's Zepbound competition. Hello, everyone. Sincerely, what up, K&T? How's it going, man? Hope you're having a great Saturday. Please check DeFi Technologies. Is that DEFT? I think this is just I've looked into this one. What's the hype around this one? I haven't really gotten it. I think this is just a Solana reserve company. They just own a bunch of crypto. So, I don't know. They're in Canada, so they're a Canada company first off. But yeah, when I go to the category, the industry down here, it's telling me that this is they're in the crypto chain and anyway, Solana reserve company. I don't know. Okay. FRMI. over McDonald's for REITs, but they are both good. Well, hey, if actually I forgot to mention, McDonald's is also, it's a pseudo REIT. If McDonald's converted to a REIT, they'd actually be in the top 5 largest REITs in the world. But McDonald's actually chooses to not convert to a REIT, and I love that about them. So your dividends are basically qualified. So this is Fermi, a $16 billion company. Whoa, they are a REIT. You're right, they are a REIT, and I don't know what they do. The REITs, if you're a REIT, that means 90% of your assets are real estate. That's how you qualify to become a REIT. And they just IPO. I wish I could give you more thoughts on them, but look, they literally just IPO'd 2 weeks ago. And when I click on revenue, it says no data here. So I'll put them on the watch list, but I wish I could give you more thoughts on them. Okay, that's good. I didn't know that. Hey, what up, Stocks and Crypto? How's it going? Yeah, that's what's really cool about McDonald's. Yeah. So let's go back to Astera Labs right here. What up? I saw Jace comment this one too. Yeah. Oh, this app is telling me, what is this right here? This is a bearish continuation triangle. Well, that's your technical analysis. If we ignore this candlestick right here actually, let me explain why they fell. Well, BlackRock acquires 5% stake in ALAB, but basically the stock fell that as soon as they announced Astera Labs partnering with ARM. So I don't know why, but analysts are seeing this partnership with ARM as bad. Maybe ARM gets more of a benefit. Maybe Astera Labs loses. I don't know. But if we ignore that fact, if we judge this company based off their numbers, this is the kind of stock I want to own. This is incredible. And this is what kind of justifies the high premium on this company. The revenue is up 150 after it grew 620. It just hits a new record every year, every quarter. So the revenue is extremely growthy, and not just revenue, not just 190 mil of revenue, but look at the after-tax net income, 50 mil, 31 mil, 25 mil. So it's super profitable, and not just net income, but look at this freaking fortress balance sheet. They literally have no debt at all. Debt-free company, over $1 billion of cash. What's the market cap on them? 26 billion. So I guess 126 of the market cap is just their cash on hand, but I love the growth. That growth is insane. So yeah. IDK said, can you look at P and G stock? Oh, Procter & Gamble, yeah. So this is a consumer staple company. They own a lot of billion-dollar brands like Tide, Gillette, Old Spice, everyday stuff like they own like diaper brands, feminine product brands that are like the largest market share. So check this out. Fabric and home care, basically Dawn and Tide detergent. That's 35% of the revenue. Baby, feminine, family care products, that's 25. Beauty products, 17. Healthcare's 15, shampoos, just random stuff like that. And they print money. I mean, easily look at that, 3.8 to 4.5 billion of after-tax net income a quarter. And they share that with you via dividends. You get a 2.7% dividend. And look, it raises every year with inflation. They're also doing share buybacks. Let me actually see this right here. So if we go down here to the share buybacks, here's you can tell the net income is up by 15, but net income per share is up by 16.5. So that's good. But again, if we go to their organic growth here, this is why the stock is kind of slowing a little bit. Their organic sales growth is only up 2% year over year. So we are seeing some slowing growth. Like, yeah, here's the main risk here, just the growth. If we go to the total revenue, the lifeblood of the company, the sales, the revenue is only up 1.7. Last quarter was down by 2, then up by 2, then down by 0.6. So slow grower, but I love them. Great never sell stock. Good never, like whenever tech starts to do bad, whenever tech goes down, like those staple companies like McDonald's, Procter & Gamble, Walmart, these safety names do really good because they have the dividend. Okay. Let's keep going here. Sorry, turn off the fan. Someone said just buy Bitcoin. Hey, Bitcoin's great, but I wouldn't go all in on just Bitcoin. I like to have a diversified portfolio. And I also love assets that pay you dividends, like even if the yields are low, like Comfort Systems right here. And this actually, Comfort Systems, if we actually compare this to Bitcoin, what's weird is I've noticed these HVAC plays actually follow whatever Bitcoin does, or used to. But anyway, I like Comfort Systems, which does pay a dividend. That's the HVAC play that's mainly seen a lot of growth from Bitcoin mining rigs in AI data centers wanting their HVAC modulars, their offsite modular reactors for their data centers. And they've seen 65% growth year over year from their technology business, which is Bitcoin mining rigs and data centers. What's happening right now is for these, GPUs, they're actually installing the HVAC cooling pipes right into the server racks. Hey, Angela, no way. Thanks for that gift there. I appreciate that. If you got a stock you're going to look at, let me know. Someone said, what software do you use? Yeah, hey, what up, Charles? By the way, if you want to get the software I'm on, it's in the link tree in my bio, the very first link there. It's a brokerage. It's where you buy stocks on. And it is an affiliate link, full disclosure. So if you go and deposit $100, we'll both get like some free stocks. So US said TER stock. I need your analysis on them. Hey, this is actually an interesting, also small robotics play. Hey, Juanito, no way. Thanks for the TikTok live gift there. I appreciate that. So here's Teradyne right here. They've actually had some nice momentum these past couple weeks here. Let's see if there's any weekly news. Nope. Teradyne faces potential impact from proposed U.S.-China tariff increase. Okay, we know. Let's check this out, though. So semiconductor test, check that. Oh, this is their robotics division. So check this out, robotics. Oh, actually, that has not done too well. Down 17% after, yeah, that's not good. I can honestly see why this one has kind of really been flat. Even right now, it's the same price that it was in 2020. So stock's been flat for a while, but yeah, semiconductor test. So yeah, if we go to the revenue is actually down 10% year over year. That's not good. And the net income's down by 50. They're still making net income every quarter. Oh, geez, sorry. Just sneezed, but we're good. Okay, so Teradyne, I can honestly understand why this one has been flat for 5 years, basically, but maybe they're worth looking into. Maybe the sentiment for the future is good. I heard that there was some, I bring up the robotics stuff because there was some like good news, like guidance or something for just the robotics division or something like that. And we can see that net income estimates, it's 49 cents this quarter. They're expecting 98 2 quarters. Look at the revenue. It's supposed to go from 750 to 815. So I guess the growth is expected to come back. Amazon and you'll be rich. Hey, someone said buy Bitcoin and just buy Amazon, you'll be rich. Check this out. I actually on Friday, if you have the intention like me to never sell Amazon, it's worth buying right now, right at this price. So I decided to buy some more shares. I recommend if you love a company and you want to buy it, you should dollar cost average into it. Don't just spend all your money at once on one day buying it. Do a more disciplined approach and maybe slowly buy into them, especially in this market with valuations a little high. What are your opinions on Carmen? Hey, well, I don't know what that is. If you have a stock, give me the ticker symbol and we'll check it out for you. So let's see. Love said FCX stock. Let's check it out. Freeport. Oh, I think this is your copper play or some sort of mineral. Oh, then we'll look at Oscar Health or Wolf, or we'll see here. Yeah, FIX stock is way too high right now. Yeah, agreed. So here's Freeport McMoran. Indonesia operations. Wait, where does the revenue come from? So only 30% comes from the U.S., then Japan is 23, Switzerland is 16, Singapore, Indonesia. So that's cool. Anyway, what do they do? Atlantic Copper Smelting and Refinery. So this must, I think, yeah, industry copper. So it's a copper play. Let's see net income. That's great. I mean, again, these commodity stocks, companies like oil stocks, precious metal stocks, they really in the long run don't like even the agricultural commodity stocks. They just never ever outperform the market in the long run. They're cyclical, but in this tariff rate environment, I don't know, they're interesting, and I like their numbers. They're easily making, if you average it out, over $1 billion in net income a quarter, which is crazy. And you get a 1.5% dividend. So there's your copper play. My favorite copper play, which actually, they are probably the copper mine, but Amphenol is the one who actually turns the copper into copper cables. And Nvidia's new NVLink spine uses 2 miles of copper cables, and they're ordering that mostly from Amphenol Group. So this one's also kind of benefiting from the AI ecosystem. I heard that they call Amphenol the nervous system of AI. Like if, okay. Skeletto said, Matt, hey, Matt from China. No way. Hey, shout out to Matt from China. He said, HRZ in, please. Yo, thanks for that rose there. Unfortunately, this is a BDC, a business development company. What does that mean? They literally have to, by law, pay out 90% of their taxable income in the form of a dividend. So if we go to their actual dividend right here, it says a 22% dividend is extremely high because of the law. And again, whenever a stock price goes down, it makes the yield go higher. So this is not good. And I honestly wouldn't trust this one in their dividend. Let's see what the revenue is, though. The revenue, oh, yikes. So this is just not great. Revenue's down 5 after it fell 8. So the revenue's gone and the net income's negative. So they can't really afford to pay the dividend either. So I think it's a tough buy. I've looked at all the BDCs out there. My more favorite BDC would be Main Street Capital. This one actually has a lower dividend, but still a good one, a 7% dividend, and actually pays you monthly. They're also they're another BDC where they have to by law pay out 90% of taxable income, just like REITs. So, let's look at Wolf. George, actually, let me look at Oscar. We won't look at Wolf because Wolf is trash. Hey, well, yeah, we'll try. Hey, try not to spam there. Well, yeah, we'll get to we'll get to KRMN. We'll try and get to that. So here's Oscar Health right here. This is one of your Medicare, Medicaid providers that they're seeing the same headwinds that UNH is, because basically federal government's not too happy that they've been overbilled consistently. So, but all the margins on all the Medicare, Medicaid stocks are going down for the future. Their net margins are going down. But here's why I like Oscar Health more than a lot of the other ones, because of how extremely growthy they are. Check this out. In 2020, the revenue was 590 mil. Now it's 9.2 billion for the full year. I mean, that's insane growth. But again, if you go to the net income, it's still a bit choppy. They did make a lot of net income last quarter, 200 mil. But all the other, if you average it out there, they're still struggling. But anyway, I like that one for the growth. I keep it as a small position though. So let's look at KRM, and and Keurig Dr. Pepper. Yeah, we'll look at them too. KRMN, Carmen Holdings. Wow, look at that. All-time high on this stock. So, yeah, congrats if you own this company. You got to be up on your position. But they're a $9.9 billion company, so they're worth basically $10 billion. Space and defense. Oh, so a aerospace play. And yeah, if we go to the revenue right here, the orange line is what the analysts expected. They expected 104. They reported 115. That's really interesting. Let's see. So they did, wait, was that real? Yeah, they really did. They made $7 million in net income this quarter. So the revenue's up 35%. Again, they just IPO'd, so there's not too much year-over-year comp history we get, but the revenue's up 35 and they made net income on that. So, I mean, that's interesting. Aerospace and defense. Payload protection and deployment, aerodynamic interstage systems, propulsion systems. Well, there you go. Aerospace and defense play, and those have been on fire, that whole industry. So let's here's Keurig Dr. Pepper right here. Investors aren't too happy with them because they're spinning off, or they're selling off their Keurig business. If you know, like those Keurig coffee machines, no way. Literally, as I was talking about Keurig coffee, the homie Ron, I can't believe, or not Ron, Maddie donates 25 Ron and says, grab a coffee. Dude, thanks so much, man. Hope you're having a great Saturday. Hope everyone's having a great Saturday. Yo, we'll look at Meta after this too. We for sure are looking at Meta and SoFi. Yo, Jimmy, please remind me to look at SoFi. I want to get to SoFi. So here's Dr. Pepper, though. They're spinning off their coffee business. But again, if the two companies two companies separate, they probably will still trade at the same valuation. So I don't know if this is a net lose for the company, but yeah, here's their current numbers. Again, it's subject to change after this huge spinoff and breaking up the companies, but you get a 3.3% dividend. That's a great yield, 3.3% dividend yield. Yeah, U.S. refreshment beverages. Obviously, that's Dr. Pepper, and then U.S. coffee, which is Keurig, and the Cape Cup Pops and all that. But yeah, they make consistent net income. They had a one-time adjustment this quarter from the acquisition of Ghost. If anyone's heard of Ghost before, it's like a energy drink kind of thing. They bought them. But yeah, they're easily making, $700-800 mil of net income a quarter. So yeah. So, okay, yeah, let's do Meta right here. Oh, yo, what up? Isaiah said BAC. We'll get to BAC. Okay, so let's see. META. So Meta stock right here. Meta, this has some technical analysis. This app is telling me that there is a double top on Meta. Well, that's okay, because if a full disclosure, I'll show you this. I do own 5 shares of Meta here in my dividend-only portfolio. Meta, oh my goodness, what did I just click? Well, let me just reset the app. Well, Meta, what... Maybe I clicked on cash down there. But anyway, yeah, Meta right here is, I got 5 shares in them. So I'll show you my total percent change on them too, if anyone's curious about that. We're up 35% all time in there. We should have gotten a bunch of dividends from this company as well. Let's see. Yeah, look at that. Dividend. So yeah. Yo, I missed, dude. In May 2024, I was buying shares at 440, 440, 450. I missed those days. I bought most of my position at 440. And my average cost basis is 530. I keep buying shares because I like Dr. Pepper. Hey, nice. If you didn't know, Dr. Pepper doesn't bottle any of their, or they don't manufacture or bottle any of their drinks. It's actually Coca-Cola or Pepsi that bottles Dr. Pepper's for them. So let's go back to Meta right here. A great stock I think should never sell. If we go to their active users, Meta literally has 3.48 billion daily active users. They own WhatsApp, Facebook, Instagram, and Threads. Dude, Threads now has the same amount of daily active users as X does, or Twitter, which is crazy. But they print money. This is insane. If you go to their net income, easily 15 to 20 billion plus a net income a quarter, and it's growing. They literally, they print money. If you go spend $100 on Meta ads or Facebook ads, $40 of that they keep as after-tax net income. They're expanding margins. I mean, they're introducing ads to WhatsApp, and they're also getting into AI. If anyone's seen the new AI Meta Ray-Bans, the Meta Ray-Ban glasses that where you can like scroll through Instagram Reels on it, that's so cool. Carlos, what up, dude? Thanks for the lightning bolt. Heck yeah. He said Iris Energy, I mean, let's do it. So yeah, what do you think about PG again? Yo, Walk 2. We're not going to cover them again, but if you are able to rewind the stream on YouTube. So yeah, hey, by the way, best way to support me is just subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. And if you missed anything, you can replay the beginning of the stream. It's really fun. But here's Iris Energy. Oh yeah, also I sell nothing. I have no course, book, WhatsApp. I'll never follow you, DM you. Only thing I have is a YouTube channel. But here's Iris Energy. This is one of the super growthy data center plays. Let's see. Is there any news? Iron secures $1 billion through convertible notes. Okay. Iron emerges as key player in AI infrastructure with advanced GPU operations. Okay. Short seller Jim Chanos questions Iron's AI business model. Anyway, here's what I think deserves or justifies this insane stock price appreciation that they've had. Because yeah, they have had a lot of stock price appreciation. Here's why I think they deserve it. If we go to the revenue right here, this is impressive. The revenue's up 230 after it grew 101. Like it's at a new record. And not just revenue, but after-tax net income. This is incredible. So, but they're certainly overvalued still now. So, hey, what up, Joe? Hey, what up, dude? He said FROG. Let's check it out. Oh, this is JFrog. Yeah, hey. Actually, I used to own this company. Let's see how they're doing right here. So, JFrog, what industry are they in? They're in the ARK portfolio, but they're a software company. End-to-end hybrid development. Yeah, they're kind of like a GitHub or something like that. Hey, no way. Shout out to the homie Carson. Yo, for the $4.99 super chat. I really appreciate that. We'll get to that in a second here. I really do appreciate that. But yeah, here's JFrog right here. Let's check out the revenue. So revenue's growing nicely. The revenue's up 23 after it grew 22, after it grew 24, after it grew 40. So they're on a streak. They're growing nicely, but they're still losing net income. That's one thing you do got to be aware of. They're still losing 20 mil a quarter. But they have a good balance sheet. That's actually a really good balance sheet. Yeah, what about the FCF, which is free cash flow? Yeah, they're making great free cash flow, and it's doubled since the previous year. Yeah, they're interesting. Maybe they're a bit of a slow grower, I remember. Like, I own them. But, yeah, I don't know. They're interesting. I wonder if they have a real moat. So Maddie said, any idea about AstraZeneca? Hey, what's that ticker symbol again? You know, I'll just type it in for you. Astra. I'm not going to be able to find it. Man. Oh, wait, was it right there? Oh, there we go. AZ in stock. We found it. Let's do it. Oh, then we can look at Oracle. Let's do it. So AstraZeneca right here. This is one of the international healthcare plays, I believe. Yeah, hey, thanks, Ray. I appreciate that. So let's see. Market, yeah, 40% of the revenue comes from the US, and then China's 12, UK is 8, Europe 7, Japan, Germany. So all these other countries, I like how internationally diversified that they are. But check this out. This is another great news. The revenue's up 11 after it grew 13. And like the revenue was 12 or 13 billion. Like to still grow at another 10% is still really impressive because of the law of large numbers. But revenue's up 11 and the net income's up by 26. Look at that net income. And this is in USD. Easily 1.5 to 2.4 billion of net income every quarter. And look at these growth rates. At this growth rate, what's going to be the same time next year? So that's insane. I actually like that. They have a dividend and you get a 1.8% dividend. Not too shabby. Let's go. Hey, Joe, dude, thanks again for that roast there. I do really appreciate that. Thanks so much. So is market psychology better than fundamentals because I'm going to make more money just trading and reading the tape and looking up fundamentals? Well, hey, that's a good question. A lot of the time, the market just falls because of emotions and psychology. Like I've read part of the Stocks and Psychology of Money, like book, and like part of it like whenever a stock goes up, whenever a stock goes up more and more, for some reason, people think it's actually safer to buy the stock while it's at all-time highs, when it's actually the complete opposite. But yeah, psychology, like emotion is basically it basically explains why stocks move. It's just emotion and reaction and future sentiment. But yeah, psychology is definitely interesting when it comes to stocks. Oracle right here. So Oracle, this is a huge cloud play. Yo, Paris said race stock. Yo, remind me to look at race. I did just buy them for the first time ever last week. So here's Oracle right here, main cloud play. Let me go see if there's any news down here. Oracle sets, whoa. I don't believe it. Let's see. Oracle sets 225 billion revenue target for 2030. Secures 65 billion in cloud deals. Well, hey, that must be why the stock has literally monstered up. That's why the stock rallied up from the 339% cloud backlog billings. So, yeah, Oracle secures 300 billion OpenAI deal. So let's go. What was this projected revenue? 225 billion of revenue. What's it right now? Right now it is 15 billion. So, whoa, it's going to go from 15 billion to basically 50 billion a quarter by 2030. So I guess that's why the stock is momentum up so much, because of the future growth apparently is insane. The future growth is insane. And yeah, if we go to their net income, they're making 3 to 3.5 billion in net income. I love them for their cloud business, cloud service provider. I don't know if I'd buy them here though, but I could see why they've definitely rallied up so much. We need to add app and Roth IRA. Yo, this is a perfect stock I'd love to own for my Roth IRA, app loving. They just got added into the S&P. What's the app you were using? Yo, hey, Mints. Yeah, hey, by the way, if you want to get this app I'm on, or it's actually a brokerage, it's in the link tree in my bio, the very first link there. It's a software where you buy stocks on. And there's an affiliate link too, full disclosure. So if you go and deposit $100, so both get some free stocks. Charlie said, how do we customize your settings to match yours and Moomoo? Hey, yeah. Also, Charlie, if you want to match my settings and everything, like you can see all the like super investors portfolio and all that. If you go to the link tree in my bio, it's like the 5th link there, or probably like 7th. It's how to use Moomoo. And I show you how to change the settings to get it more user friendly. Or you can just go to my YouTube channel. It's called Nathan Robert. Just type in the YouTube channel Nathan Robert, and you can look for my Moomoo video there. Okay, so yeah, Paris said race stock. Ooh, Astera Labs. Actually, should we get to Astera Labs first? Okay, well, let me just go over race. So if we go to my portfolio right here, my newest position is actually RACE Ferrari stock. And again, I've nibbled on my position. I plan to double my position, but as you know, in right now's environment, it's tough to spend all your money right now that I want to. So I'm being very patient. That's what you got to do in this environment when buying a stock. Be patient. I bought the dip on them because the dip was doesn't bother me. So yeah, anyway, check this out right here. If we go over to their, like I didn't buy Ferrari because they're on a dip. Well, it made it certainly convenient, but I'm not recommending Ferrari because they're on a dip. I'm recommending them because they're a good financially stable company. If you go to their net income, I mean, this is insane. And again, Ferrari's a European company, but we've converted it to USD. They're easily making 400 to 500 million of after-tax net income a quarter. Look at the growth rates. I mean, what's it going to be the same time next year at this growth rate? And you don't just get, net income, but you get or you don't just get stock price appreciation, you also get dividends. So check this out. You get nearly a 1% dividend. They raise the dividend every year, but a 1% dividend. And you also have gotten over 1% in share buybacks. I kid you not. Here's so you can tell. If we go to the net income is up by 12.8. So the net income is up by 12, but the net income per share is up by 14. Again, the EPS growth rate and the net income growth rate should always be the exact same, but the EPS is up more thanks to the share buybacks. The share part of the ratio went down, meaning there's more net income per share. Okay, so hopefully that was helpful. Let's look at Astera Labs real quick. Then we can look at Viking Therapeutics. Viking Therapeutics is a startup, kind of, yeah. But let's see here. ALAB, that's in the Nvidia portfolio. So, oh no, that's APLD. Oh wait, we just looked at ALAB. Actually, we're not going to look at ALAB. We literally looked at them 5 minutes ago. Sorry. Well, let's just look at this one right here. VKTX. Here's the thing. VKTX, Viking Therapeutics. The reason the stock has been struggling so hard is, here's the reason they gapped up. This is a revenue-less company. They don't sell anything, but they, on this day, got FDA approval for their product. So that was great news. They're like finally now able to sell a company. So they got FDA approval. The stock monstered up. And it's been 2.5 years and they still haven't sold anything. Investors aren't too happy with them. They still haven't made any progress. I mean, that's why the stock is like falling so much. So if you go to the revenue right here, it says zero because they've literally never sold anything. They never sold a product or a service. So you're really paying for a lot of future hopium. And yeah, look at that. They have no sales and they're losing a lot of net income every quarter. But luckily, they still have a great balance sheet. Look at that. Actually, whenever you lose net income, you know that money has to come from somewhere. So that's why the assets are slowly trending down. But still, they can afford to lose this net income for a while. But yeah, we just want to see them actually finally sell something. Okay, so all right. Ooh, Archer Daniel Midlands. Hey, that's your like commodity play, like agricultural commodity play. Actually, I know the previous CFO of the company. The CFO, actually, I think it was like around this time. I think it was this news. Basically, this company was in a price fixing scam where they were price fixing all of their commodities and selling them, and then the CFO felt so bad that he went to the FBI and told him about it. Even after he had to wear a wire for many years, he served after all that served 2 years in jail. Actually, let's go look at this company though. They help Coca-Cola. Coca-Cola supplies their corn syrup from Archer Daniel Midlands. But check this out. You get a 3.2% dividend with this company. Great yield. Yeah, oil seeds, basically just agricultural commodity items. If we go to the revenue hasn't been too great. Revenue's down 5% after falling 12, after falling 8. Yikes. So yeah, they've been on a streak of declining sales, but they are at least still making a good amount of net income every quarter. Even though the sales are declining, they're still at least chipping away a couple $100 million of after-tax net income a quarter. That's how they're still able to afford the dividend. Oh, hey, look at that. State Farm Insurance owns 10% of the company. That's interesting. Okay, would you consider investing in CoreWeave? Yeah, I do like CoreWeave, but as a super small position, like as like a small position, I wouldn't make this one as a meaningful size position because I do think in the long run they're holding the bag, but less so now because they had basically this unused capacity. But now CoreWeave, for them to sign their next deal with Nvidia, they're forcing Nvidia to basically buy back their excess capacity. So that was like that was back around here. That was great news for CoreWeave. I was shocked to see that actually. So hats off to CoreWeave. Check out the growth here. This is the other main reason thing I love about CoreWeave. If you go to the revenue went from 400 mil to 1.2 bill. Insane growth. And it's 1.2 billion this quarter. Analysts are expecting in 2 more quarters, 1.8 billion. The revenue is just supposed to continue to hit a new record every year, every quarter. And unfortunately, they still lose a lot of money. They're still losing a couple $100 million a quarter, but it's not like analysts aren't expecting this. They're expecting them to continue to lose basically, how much did they lose? 250 million of net income a quarter for the next couple quarters. So anyway, CoreWeave's interesting. Let's see what the news down here. 2C's Capital opposes CoreWeave's Core Z acquisition. Oh yeah, CoreWeave. This is funny. CoreWeave is trying to buy Core Z, which is a crypto mining company. Okay, they're cool. And Nvidia owns them. Nvidia is if we go to the Nvidia portfolio right here, that the largest shareholder. Actually, I don't think it loads it up here yet because it doesn't do it there. But Nvidia owns a bunch of that stock. Okay. King said, "Dear, please. You know what? This is my favorite way to get exposure to agricultural commodity, John Deere stock by far." And Grant said, "What app is this?" Yeah, hey, by the way, this is a software or it's really a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. It is an affiliate link, full disclosure. So if you go and deposit $100, we'll both get like some free stocks. But yeah, lowest fee, free brokerage, no fees at all, actually. So anyway, here's John Deere right here. I'm looking to buy this company. I love them. You get a 1.5% dividend yield. Look at that. They raise their dividend every year as well. Faster than inflation. Dividend went from $3 to $5.80. So very nice dividend growth and a safe, even after all that dividend growth, the payout ratio is only at 23%. And if you go to the PE ratio, basically net income multiple, they're only trading at 23 times PE or net income. Yeah. Production and precision agriculture, they actually have a small drone business. I kid you not. This is what I was looking at their investor thing. They're getting into like, I don't know the exact word, like seed cropping, but with drones, like carrying a bag. It's kind of cool actually when I saw it. But anyway, John Deere, they also make robots that just farm your whole robot tractors that just farm your whole potato field for you and stuff. Pretty cool. Um, okay. Let's see. I think any AI plans need to have a proven track record. That's one thing a lot of investors are worried about right now. Meta, Google, Amazon, they're all plowing money into CapEx. Or I'll just show you this right here. If we go to Amazon, we go to their cash from investing activities, which is, you want this to be negative. That means they're investing in the future. If this number was positive, that means they're selling off their own assets. They're selling off their assets. Well, you rarely never want to see that. You always want to see it negative. That means they're buying new assets, reinvesting into the company, buying land, buying whatever. Amazon spending $30 billion a quarter. If you go to the past year, it used to be reasonable, $10 billion a quarter, but now it's $30 to $39 billion this quarter. They're spending like crazy on AI, but that's what I love about Amazon so much. The fact that they can afford to spend all this money. Meta can afford to spend all this money. Google, but we want to see real returns come from that. How much do you earn from the Moomoo platform ad? Yeah, hey, by the way, actually, I don't know, but I think I get like $20 worth of free stock. So yeah, by the way, full disclosure, if you go to the link tree in my bio, the very first link there, and get this app I'm on, it's a referral. So if you go and deposit $100, you'll get some free stocks. They have like a free affiliate program. You'll get like a fractional share of Nvidia, and I'll also get like a fractional share of Nvidia. So yeah. Also, full disclosure, all the links up there are affiliate links. If you wanted to get Robinhood, there's also an affiliate link for that. And if you wanted to get Webull, there's also an affiliate link for that. So I love, you can buy stocks on any platform, but my favorite, I love Moomoo because they're the lowest fee free one. Like with Robinhood, this brokerage right here, they make you pay $5 a month to get this APY. But with Moomoo, it's free. No monthly fees, no commissions. And you, on your idle cash, you get a 3.85% APY. Anyway, let's keep going here. Let's see. Tilly said Path stock. That's actually one of my biggest losers. Check this out down here. We're down bad on UiPath, Zoom, and UiPath. I'm still really investigating if this company has a moat or not. I was wondering, they were like the original AI robotics play, but I just don't know. Look at that. Number 2 news, UiPath platform named among Time's best inventions. That's a lot of shilling, but okay. UiPath right here. The reason, if you look at the volume recently, the reason they've been rocketing up is basically because they partnered with Nvidia, Snowflake, which is basically Palantir's biggest competitor. And actually, Palantir and Snowflake just went to a partnership. They partnered with Snowflake, OpenAI, Nvidia, and Google Gemini. So that honestly kind of shows that they don't have their own products to do that themselves, but they're partnering with other companies, which was seen as good sentiment. They are still, the only reason that they're making net income right now is because of their interest on their cash. One thing I love about UiPath is the fact that they have so much net cash on hand. They make 12 million of interest a quarter, or 12 million of positive interest a quarter, when a lot of companies are paying interest from their debt. Also, another thing I hate is that the CEO quit out of nowhere. It was a terrible look. It basically was a cash grab. CEO quit out of nowhere, left management for dead. By the way, I'm also depressed. I've been in UiPath. If you look at the bottom left, I bought this on 9/2021. I've been in Path since 2021. And look at all these buy orders. I'm so depressed. I just want to get out of that one. Man, I'm still down 25% on them. So yeah. Just a question. BlackRock reports. No, that's no big deal at all. No, hey, BlackRock, the only reason they sell out of Apple is if their clients or customer. If you ever look at a company like Apple, if you go to Apple right here and you go to largest shareholders, you see BlackRock. Wow, BlackRock owns 7.7% of a $3.7 trillion. They don't actually. If that was the case, BlackRock, that would add so much market cap to BlackRock's. Vanguard and BlackRock are ETF owners, and they have their own index funds that own Apple for you. So if you go buy the S&P 500 BlackRock version, whenever you give BlackRock the money, they then just go buy Apple with it in the ETF. I'm probably wording that so weird. Let me just get back to what I was going to talk about Apple with. But hey, check this out. Apple is a beast of a company. What app is? Hey, David, if you want to get this app I'm on, it's in the link tree in my bio, very first link there. It's actually a brokerage. But check this out right here. We can see right here. Oopsie. Did my phone just... Uh-oh. There we go. Okay, smartphone market share. They literally have, this is what's crazy, a smartphone market share of 17%. And iPhone's half the revenue. Best product they'll ever make is the iPhone. A lot of people are locked in the Apple ecosystem. I'm on an iPhone right now. I have a Mac. And also, but the most valuable part of Apple is actually their services business. I kid you not. Whenever you go spend $100 on a game that you've gotten through the App Store, like Clash of Clans, you can spend $100 on gyms. Literally $30 of that goes back to Apple as a royalty, a developer fee royalty. They collect 30% of every transaction. That's the most valuable part of Apple, brings the most to their bottom line because we can see the gross margins of their products versus their services. It's a whole different ballpark, whole different company. So yeah, then they have the Mac sales, the hardware like the wearables, the AirPods, the watch, and the iPad revenue. And here's also why they're affected by tariffs. If we go to where the revenue comes from, 36% of all the revenue just comes from the U.S. Well, I feel like that's low. I always thought it was a little higher. So that's why they're also affected by tariffs. 26% of all the revenues from EU, 17% of it is all China. China is actually nice to us because if you don't, like in the US, we don't buy Huawei phones. We tariff the life out of it because we see all the Chinese phones as spyware. So I'm actually shocked that China allows us to. So actually, China probably allows Apple to sell to them because Apples are so secure. Like literally, like even in court cases where the government's like, no, we need you to find the information on this criminal on their phone. Apple's like, even us, there is no back door. We can't do it. Like they really do have some of the safest stuff out there. So that might be why. But anyway, great company. They're making 25 to 35 bill of after-tax net income a quarter. We go to the actual share buyback program. They have the largest share buyback program of any company on earth. Actually, the dividend cost $4 billion. So they made 25 bill this quarter. Dividend only cost $4 billion. Lots of room to raise the dividend. Since they have so much leftover money, look at the share buybacks. Literally $21 to $25 billion a quarter solely buying back their own stock. And here's what it does for you. If you go to the net income's up by 9.2. But net income per share is up by over 12. Again, because the share part of the ratio went down. The net income growth and the EPS growth should always be the exact same. This just adds back in any dilution or share buybacks. Basically, if the total common shares outstanding go up or down, it factors that in. Pretty cool. Yeah, Isaiah, what's up? Yeah, that's pretty cool. So, good evening from Europe. Want to check RBA stock. What up, Remco? Let's do it. RBA. No wonder Tesla is going to do phones now too. Is that true? I don't think Tesla was serious about the phone thing, but you know what's actually the next thing from phones? And like, this is probably still 5 to 10 years away, but has anyone seen the new Meta AI glasses where it literally is like a built-in phone on the display? You can check it only has Meta apps, obviously, but you can check your WhatsApp messages. You can scroll through Instagram Reels, and it's like a little thing on your wrist. Basically, the new AI Meta Ray-Ban glasses, for the people that saw the demonstration, you know what I'm talking about, but it would look so cool. And that's with right now's technology. Imagine in 5 years. Pretty cool. But anyway, what is this one? I thought this said Rich Tech Robotics. This says Richie Bros Auctioneers. Let's check it out right here. So this stock has done great the past couple years here. Wait, what is this company? What do they do? They are in a specialty business service. Iron Planet Marketplace, Government Planet, Salvage Sale. Is this like I don't know what this company is. Like, I don't know. Anyway, let's go look at their numbers because that's what actually matters. If we go to their after-tax net income right here, this is great. Easily $100 million of net income a quarter. What are the sales though? The sales are up 8%, but the net income did fall by 1%. That is a slight bit odd. That might be, well, there's no earnings. Huh. What's the multiple? Oh, they trade expensive. They trade at 50 times net income. I don't know. I wish I could give you more thoughts on them. I apologize. But yeah, 72% of all the revenues from the US. Anyway, interesting. Where are we at in the AI bubble? Hey, I don't know. The thing is, we could just be in the next roaring 20s. We could rally to the end of the decade slowly. Like, it is a possibility. ALAB. You ever see Apple getting to a share price like Meta? Yeah, Apple has done a lot of share splits already. Yeah. I think they've done 2 or 3, but they did like a 2 for 3 stock split and another 2 for 3 stock split. Yo, Google used to be, No, that was Amazon. Amazon used to be 20,000 a share, and Google, when I first started investing, I looked up Google ticker. Google was over $2,000 for one share, and Amazon, I think, was like, I couple thousand, I don't remember. But then they did the 20-for-1 stock splits. Again, it doesn't really matter if they stock, so you can buy fractional. But let's look over Astera Labs right here. This is ALAB. Again, there was some bad news around them partnering with ARM. And again, I mean, I don't know what the bad news is. I haven't looked into it. Apparently, like they must the risk. I don't know. It must be a win-lose where Astera Lab loses and maybe ARM wins. But here's why I like this, or I still like Astera Labs. I judge a company off their numbers, and their numbers look great. The revenue went from 76 mil to 191 mil. I mean, incredible growth, up 150%, and they're making net income. Look at this. The past 3 quarters, they're actually making good, consistent net income. That's why they're actually on my watch list. And of course, this balance sheet right here, it's a huge safety net. It gives them tremendous freedom, $1 billion of cash and no debt. I mean, Astera Labs is cool. But yeah, they're on the watch list to buy on the dip. Hey, what up? Luffy said HIMS right here. So HIMS, this stock, let's see right here. Let's see. HIMS and her CEO sells 11 million shares. Wow. The stock fell 15% on Friday. Whoa. Okay, let's see. Yeah, CEO sells 11 million. Yeah, Trump proposes weight loss prices reduction to $150 monthly. If you didn't know, I'm pretty sure the Eli Lilly subscription is like $500 a month. But I don't even think HIMS sells any weight loss prescriptions. You know, if you didn't know, HIMS used to sell Ozempic on their website, but now they don't sell Ozempic on their website anymore. And that's what had led to a lot of their growth from people. They literally, HIMS used to sell their weight loss prescription at like $150 a month. But then when it got out of FDA shortage, they could no longer sell their products, so they had to partner with Novo Nordisk, and then Novo Nordisk dropped them. But then I heard some news about him partnering with another new company to try and sell a new weight loss prescription. They've just been through a roller coaster of stuff. So I guess we'll see what happens the next few months here. But look at this. They're making good net income. Like, this is real. They're really making 40 to 50 mil in net income a quarter. These year-over-year growth rates are the best part. That is insane, these growth rates. The revenue is really growthy, but again, I think investors are concerned. They think the stock is selling off because what is the future growth rate going to be, especially if the administration is not too happy with, look at the very top here. So look at this, from $1,000 to $150. Speaking of, Ozempic could potentially drop from approximately $1,000 to $150. So when I said $500 a month, I guess that wasn't true. I guess it's $1,000. I read 500 somewhere, but anyway, there's your shenanigans around that. All right, we'll look at a couple more stocks here, and then I do got to go, unfortunately. But hey, if y'all want to hit the follow button, we stream every single day, and I sell nothing. I have no course, book, WhatsApp, nothing like that. Tubby said, is Amazon going to dump further? I don't know. Here's the thing. Amazon might dump further, but they're worth buying even now, especially if you have the intention to never sell. It's worth buying and worth nibbling even right here. But notice I said worth nibbling. You wouldn't want to go full-size position and never buy again. You know, you want a dollar cost average, slowly buy into Amazon. That's what I like to do. I like to slowly buy into my companies. You know, for most of the time, I'll slowly buy into them. More disciplined approach. What platform is this? Yeah, hey, what up, Morris? Yeah, hey, by the way, this is a brokerage where you get stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. And if you're on YouTube, it's in the link in the description of the YouTube stream. Yeah, if you're on TikTok, it's in link tree bio. So Rob said Teladoc. Yo, that's a big Cathie Wood play. You know what? If we go to the Cathie Wood portfolio right here, you know, we can see all the super investor portfolios like Nancy Pelosi. You know, they have to make all their trades public by SEC law. But another one is Cathie Wood. If you go to her portfolio, you know, she has Tesla, Robinhood, and then Roku. Yeah. So look at this right here. Or no, not Roku, Teladoc. Teladoc isn't even in her top holdings anymore. Whoa. It used to be Teladoc, I think, was her second largest holding, but this is one of her worst picks out there. You know, who's dumb enough to follow Cathie Wood into her picks like UiPath and Zoom? I don't know who in their right mind would ever do that. But yeah, Teladoc was another one of her picks that is just done terrible. They just lose money hand over fist, like an unsustainable amount. The whole company is worth $1.5 billion. So remember that number. They're worth $1.5 billion. I mean, they lost 30, 100 mil, 50 mil, 40 mil, nearly $1 billion that one quarter. And like, they're losing all this net income. They're losing all this money, all for a declining business. The revenue's down 1 after falling 2. So they're just not a good company. They're the kind of stock I think to continue to go lower. What do you use to see their holdings? Yeah, hey, by the way, it's that same brokerage I was just talking about. Yeah, again, if you want to get this brokerage I'm on, it's in the link tree in my bio, very first link there. Yeah, you just click on the Insights tab and you can see all this. But yeah, full disclosure, it is an affiliate link. So if you go and deposit $100, we'll both get like some free stocks. I think a free fractional share of Nvidia. But it's a free brokerage, no commissions, no monthly fees or anything like that. So, Elo, what up, dude? He said LEN. That's Lennar. You know, speaking of Warren Buffett, I think he just bought that stock. Let me go double check. So if we go to Warren Buffett's portfolio right here, again, he has to make all his moves public. What does it say at the top here? Okay, so he increased his position. Yep, right there. So he bought Pool Corp, and his second largest increase was in LEN stock, Lennar. Look at how his positions went from, basically 150 shares, 150K shares to 7 million shares of Lennar. So let's go analyze them. That's actually one of the home builders. Warren Buffett's been buying Lennar, D.R. Horton, Pool. A lot of these are interest rate sensitive. Hey, Bayo, did you really? I'm going to give you a follow. I really appreciate that. Thanks for the support there. But yeah, Lennar Corp right here, I think it's an interest rate sensitive company because they're a home builder. And but I actually love the home building industry because they trade at low multiples and you get high dividends and insane share buybacks. So check this out right here. If we go to their PE ratio, they're trading at 12 times PE, which is 12 times net income. Very low multiple from an S&P 500. But look, the industry average is an 11 because that's the whole industry for all the other home builders down here. So the PE ratio is fair. And look at the dividend. You get a 1.5% dividend, but notice the best part is the payout ratio. The literal payout ratio is 13% for a 1.5% yield. That's 4x the yield of Apple and a lower payout ratio than Apple. That's insane, again, because of the low multiple. But also, they're slow growing because of the high interest rate environment. Home builder sales have been slowing down. So, it just makes sense. That's the whole point of hiking rates, to slow down the housing market and spending. The sales are down 6.5 and the net income is down by 50. So the margins are collapsing, but notice they're still making a $500 million to $1 billion a quarter. So they made $500 million in net income this quarter. And again, the dividend only cost $129. Since they have so much leftover money, they are deploying it in share buybacks. Literally, this is the best part about the company is the share buybacks. So they spend billions a year on share buybacks. So look, the net income was down by 49. That's rough. Net income's down by 49, but the net income per share is only down by 46. They've basically bought back 4% of all the shares. Oh, I'm such an idiot. I've been streaming on YouTube this whole time without vertically streaming. Oh, dude, that's unfortunate, but oh well. Hey, good night, Grug. Hope you have a great rest of your night. Don't worry. We're probably about to end the stream here in a couple minutes, or we are. So here's SoFi. We've been streaming for over 2 hours and 15 minutes. I had a great time. By the way, if you want to follow button, we stream every single day. Can you explain more about share buybacks? Yeah, so basically here's the part about share buybacks. And a lot of my companies, I specifically look for companies that buy back their own shares because in short, share buybacks forces the stock to go up. It makes it literally makes the EPS go up, which makes the PE ratio go down. So and it gives you more ownership in the company. It makes the cost of the dividend go down since there's less shares that exist. They don't have to pay dividends to those shares. It's just great news. Again, like if the company's doing share buybacks, the net income will grow, but the net income per share will grow faster. It gives you more ownership, makes the PE ratio go down. Just in short, forces the stock to go up. So here's SoFi Technologies. I do own SoFi, by the way, one of my favorite growth companies out there. A lot of stocks right now, like the quantum names, are all just propped up on momentum and hype right now. But SoFi is a stock that I believe deserves this insane stock price appreciation. And I think their high PE is justified because of this growth. I can't believe it. If we go to their financial services revenue, it's up this is insane growth. No analyst expected this. Revenue's up 105 after growing 80, after going 222, after going 264. So that growth is insane on the services or financial services business. They have their own banking charter, they're a fintech, and we can see the analyst expectations. We can tell that they're beating on analyst expectations because the orange line is what the analysts expect. Every quarter they beat on revenue. They beat on net income or EPS, which is just net income. And then EBITDA, by a huge margin. They expected 84 mil. They reported 125 mil. So that's why, in my opinion, I think people are really taking SoFi serious. The growth is back. Revenue's up 42%. They did 850 mil of revenue. And out of this 850 million of revenue, 100 million of it was after tax net income, or 97 million of it was after tax net income. SoFi had many great news and it's still getting held back. I think it's because still SoFi, even still, and I do own SoFi, by the way, been one of my best performing stocks of all time. Also, one of my biggest regrets of all time was selling out of SoFi or most of my SoFi at a much lower cost. But yeah, I've been with you on this one. I've been holding SoFi. I bought this one, years and years ago at that price. But yeah, we've just been basically diamond handing SoFi. But yeah, great fintech. And but what I was trying to pull up there was they still trade at like 50 times next year's net income. So I'm not shocked to see them kind of coming back to reality. A lot of these stocks right now, I wouldn't even touch at their current valuations. AMD, Robinhood, SoFi, well, not some of these other ones, but they literally trade at all 50 plus times next year's net income, and it's tough to pay. That's why I've been buying some of the cheaper names like Sprouts Farmers Market, like Progressive Corp, like, not Axon, but Calmain. I just bought some Ferrari stock on their dip. Oh, I bought a stock probably no one's ever heard of is MUSA. It's my favorite oil and gas stock out there. I did a lot of research and this is my favorite oil and gas play out of any oil and gas stock that exists. They're my favorite. Speaking of share buyback friendly companies, guess what? This company has bought back 36.5% of all the shares just since 2019. So literally since 2019 Q4, they've bought back 36% of the entire company. And that's what I love about them. That's why I think they're going to outperform every other oil and gas stock. Your typical oil and gas stock, if you look, has a really high dividend yield and also a really high payout ratio. But notice this one, way lower yield for an oil stock, but way lower payout ratio. And since they have so much leftover money, they do share buybacks. I love them. Okay, so is InU better than SoFi? Let's do it. These are both great companies, but both are they're both fintech, but both are completely different businesses. So this is actually most of SoFi's revenue or half of it is student loans in the US and stuff. Well, InU Holdings, and again, I love this company. If you want exposure to crypto, this is like a pseudo crypto play. This is actually a crypto bank out of Brazil and South America. And that's where actually people use crypto for transactional purposes because their currency sucks down there. We have a good currency. We don't really it's not too popular here. We just use cash. But in Brazil, this company's genius. They decided to open up a crypto bank and they, with crypto banks, you can take crazy fees because it's not like your average bank. So they print money. I kid you not. This is their net income, 639 million net income this quarter, up 30% after growing 111. The growth is actually insane. And this is in USD. We've converted. Oh, wait, this is just a US listed company. So even though 93% of all the revenue comes from Brazil, it's a US listed company. It's on the NYSE, really. Nope, never mind. I lied. Okay. They're actually headquartered in the Cayman Islands. They are NYSE listed for sure, but they're actually headquartered in the Cayman Islands, so they might not pay tax. Let's actually check that. Let's go see if they pay tax. That's funny. I know some companies don't. Normally it's in there. Actually, well, you know what? If the tax line, okay, they do pay tax. Okay, so never mind. Good company. Okay, can I use this broker in Africa? I actually don't know if you can. HLT is that? Oh, Hilton, this is the best, because this really isn't even like a hotel. It's really like a royalty company. But Hilton Worldwide collects royalties, and that's what I learned that from Bill Ackman. Bill Ackman in Pershing Square. Let me actually go to shareholders. Whoa, did he? Oh, I remember he did reduce his stake in this company, or he might have sold out of it. Pershing Square, and if anyone knows Bill Ackman, he's to be the largest shareholder here. Anywho, yeah, good net income on this company. Easily 400 to 500 million net income a quarter. And check this out. Here's the best part about this company is the share buybacks. This is another Okay, we just filled out the CAPTCHA on TikTok. Okay, they thought I was AFK, but here's the best part about Hilton Worldwide. And I did own this company. I did sell out of them, but they literally spend $700 million every quarter, just always on share buybacks. And look at the dividend. This is what's crazy. The dividend only cost $36 million. And they're spending $700 million on dividends or on share buybacks a quarter. So here's what that does for you. The net income is up by 4.7. So net income is only up by 4.7, but the net income per share is up by over 10% because the shares went down so much and you get the small yield. But I love that company. Do you own any gold? I actually do not own any gold, and I kind of regret that. But yeah, here's the commodity of gold. Here's the best ETF to get exposure to it is IAU. All right. Are you using Moomoo? Yes, I am, Carrie. I am using this. Yeah, I am using Moomoo. Hey, Clock or Glock 101, what's up, dude? And Nico, MUSA is still down, even though it's bought back so many shares. It may not be that safe. No, hey, if you're wondering why is Murphy USA down so much, it's because the price of oil. That's a whole different story. I could happily discuss that. You know, if you go to the revenue right here, the total revenue is down 8.2%. Every oil and gas stock has seen that exact same. It just follows the price of oil, so it's unavoidable. Okay, okay. Let's see here. When it goes to my fair value, I'm buying. It's way too overvalued now. It's number one. Yeah, Remco, those buybacks are insane. Thunder, what up? He said Rocket Lab. Let's check it out. So Rocket Lab, this is actually my favorite space stock out there. So I've looked at a lot of space stocks like Lunar, ASTS. This one's really my favorite one. So check this out right here. Rocket Lab, it's mainly because they actually have real revenue and real numbers. But check this out right here. Let's see their news. Morgan Stanley projects strong growth for Rocket Lab. Rocket Lab secures 2 launch contracts from JAXA. That's the basically Japanese NASA. Rocket Lab signs major contracts with Synspective, completes 7th launch. Okay, that's news. Here's what I like about them is their numbers. They're also beating on expectations every quarter. The orange lines what the analysts expect. Notice they had a big beat on revenue this quarter. But look at this. Space Systems revenue, largest business, is up 27. After grew 95, after grew 8%. So they're seeing a lot of growth on the space systems revenue. And also that business, they're also huge in the launch services right here. That business is up 58%, literally to a new record. So, hey, yo, watch out for that guy in chat there. Hold on. Yo, watch out for that guy in chat there. I just blocked him. Yo, watch out for people impersonating me. Yo, I'll never follow you, DM you, message you. I don't sell anything. I have no course, book, WhatsApp, nothing like that. No way. Someone in chat said, or Kareem said I'm up 15x on Rocket Lab. And you know what? You deserve to be up 15x on this stock because you know what? You didn't sell. You probably trimmed your position, but you didn't fully sell out of your company. You know, for a lot of people, it's tough to, as soon as they double their money, that's one of the biggest mistakes people do. As soon as they double their money or triple their money on a stock, they'll sell out of it. That's actually my biggest regret ever. Like Robinhood, for example. Look at this. I sold 50 shares at $36 a share. And it made sense why I did it because for the longest time, I remember I've been in this name since IPO. I have been an absolute diamond hander. There are some of my buy orders, but I bought the stock and it was down on it for literally years. Was down on it for many, many years. And then when I was finally up 3x on my position, I'm like, hey, let's sell most of my position, 50 shares, take the 3x gain. Ended up being the worst decision ever. Luckily, I didn't fully sell out, but sometimes you let your winners win. Same with SoFi. I regret every share I've ever sold a SoFi, but you got to let your winners win. Okay. Do you feel it's too late to purchase IAU? Yeah, it really is kind of too late to buy gold, but there are some pseudo gold. Another great gold play. Actually, here's one I'd probably consider at this price. This is Royal Gold. It literally it hasn't been as growthy as gold, but it's you get exposure to gold with a yield. You get a 0.9% dividend yield. So basically 1% of your money back a year, but this is really a royalty gold play. The royalty streams are 36% of the revenue. The stream interest is 63%. So that's how their margins are so crazy. Their net margin is 63%. That only comes when you're a royalty, but that's a higher net margin than Nvidia does. Nvidia has like a 55% net margin, which is also insane. You basically go spend $100 on an Nvidia chip, $55 of them is after-tax net income, but this one's even higher, 63. So yeah, they're easily making, because the price of gold is so high. Fortress balance sheet as well, no debt on this company. RGLD is a cool gold individual play. Yeah. IAU, by the way, another gold ETF is GLD. So here's GLD ETF, but look, I've overlaid it with IAU. So both stocks are next to each other. IAU is the better version. It's run by BlackRock instead of Spider. You save 15 basis points on expense ratio fees a year. So for every $1,000 you put in, you save $15 a year by buying IAU and expense ratio fees. Taiwan M still seems underpriced, even though it's flag point a bit. Thoughts? One reason why Taiwan Semiconductor is struggling a little bit is, well, they do have their, look at this. This is actually such great news. This probably the great sentiment. Taiwan Semiconductor and Nvidia showcase first US-made Blackwell chip wafer. So their first ever US made Blackwell chip. So if you didn't know, Nvidia before today, all of their chips were actually made, and again, Nvidia just designs their chips. Nvidia designs them. Taiwan Semiconductor actually makes them, and they make them all in Taiwan, which is 6 feet away from China. We can't have that. So one of the main risks was that Nvidia is going to have to move a lot of their production away from Taiwan Semiconductor, take money away from them. Basically, money's going to go from Taiwan Semi to Intel, and that's already happened. Intel is also moving some of their older series chips and CPUs to Intel, after Nvidia took a 5% stake in Intel, and the government did too. But we're moving some of our manufacturing away from Taiwan. But this new news of I forgot about their Phoenix facility. That's great news. Obviously, it's probably going to cost much more per chip, not making it in the US, but they save on tariffs. But check this out. We can see their market share, 71% foundry market share for these like nanometer wafer chips. They have insane margins, 53% net margin. We go to the first off, they're super growthy. The revenue is up 35, but net income is up by 42. What does that mean in English? It means they expanded margins. Net margins up to 53. I just love everything about Taiwan Semi, and you get the dividend. Even if you buy the stock now, you get a 1% dividend. So they're cool. I wouldn't sell out of them. I love their numbers. What do you think of NVTS? I don't love this company. This is a company saved by Nvidia. They would be bankrupt if it weren't for Nvidia. But wow, the momentum is insane. There must be some good news. What is it? Because look at the analyst expectations. Actually, these just got slightly revised higher because it was lower, I remember. But look, revenue right now, numbers are awful. Like, this company would be bankrupt and would be at zero if it weren't for this Nvidia partnership. And that's why I'm avoiding this one. But the momentum is real. Nvidia does this commonly. That's the whole reason why Nvidia took a stake into CoreWeave. They need the whole ecosystem to do good, to prop up Nvidia and to keep buying Nvidia chips. But here's Nvidia Semiconductor. It's really just junk. I mean, the revenue is $14 million. It's down 29% year over. So they have $14 million in revenue. And look at what the analysts are expecting. $9 million, $10 million. I mean, it's just nothing really blowing me away here. So, but it looks like the momentum is insane. Let's see. Is there? I hope there's actual news to justify this stock price appreciation. I hope it's not just momentum. But anyway, that's a semiconductor momentum play. So Trap, what up, dude? He said MP Materials. Yeah, hey, this is another company that the government's taken a huge stake in. So the government took a 10% stake in MP Materials, and literally they're going to be opening up this one rare earth mineral mine that will supply the U.S. for the next 50 years with certain rare earth minerals. And check this out right here. The reason they're doing this is because China is implementing new export controls on rare earth elements. But yeah, let's see here. They had like a floor price. Like, it was like $110 per pound of these certain minerals. What is this right here? UAMY. Okay. In materials, again, if we go to the revenue right now, it's good, but it's going to be even better in the. Yeah, look at that. It's $57 million. It's supposed to be $117 million in 2 quarters. And the EPS is supposed to go positive as well. Anyway, you're paying for the future. Honestly, most of the news is probably priced in, but you're kind of just playing if you think earnings will go higher or low. I don't know. I don't like the risk reward here. CG, is that Carlyle Group? Hey, if anyone remember the last time we were talking about Carlyle Group, someone had told me that they own RuneScape. Carlyle Group was the one that owned RuneScape. Well, I actually found out that just under a year ago, so sad, they actually sold RuneScape. This is a private equity company, or well, I guess public, but they own a bunch of private companies and stakes in companies or just own companies. And one of the companies they used to own was RuneScape, and they sold it. But yeah, global private equity, credit, all that stuff. So I love, when I say I love, I mean I love this company. They're trading at a low PE. You get a 2.5% dividend. The PE ratio, what's the PE? Not price to sales. The PE is a 16, and that's real. They're really trading at 16 times net income. They're making a couple $100 million a quarter. So Carlyle Group's a nice dividend growth play. Okay. BlackRock has 5% Nebius. I think that's why. I saw that news too. But that's not like, that's just going into like a BlackRock ETF. So a new BlackRock ETF will now own a little bit of NVTS. So that's what that means. It's not like BlackRock themselves bought it. So many good stocks. So it's going into some ETF, which is still good news. That's still that's still going to send the stock up. It's still new money toward them. Do I need to wait a few more months waiting for it to come down? Yeah, I that's what I would do. IDK, like I would. Some stocks, like you Hey, what up, Narga? No, there is no pre-recording live stream. I saw your stock earlier. I forgot what it was. Oh, the URA ETF. Yeah. So if you're looking for, by the way, I'm actually about to end the stream here. I'm just really tired. I've been streaming for 2 hours and 30 minutes. Yeah, this is not pre-recorded. But yeah, here's the uranium ETF, ticker symbol URA. And yeah, congrats if you own this one because it's literally at an all-time high right now. Basically, the US, and another rare earth mineral, we're no longer buying our uranium from Russia and China. We're now actually trying to supply our own uranium from Canada and the US. So basically, a lot of the US uranium companies like UEC, they bought a uranium mine off Rio Tinto, one of the more better uranium stocks with a real asset. Some of these are kind of just startups, but we're trying to actually invest in our own infrastructure to supply our own uranium, that yellow cake uranium. So, all right, well, that's going to be the stream, guys. I hope you have a great rest of your day. Unfortunately, I got to go, but if you want to hit the follow button, we stream every single day. We're going to be streaming tomorrow, of course, the same time. We're going to be doing 2 streams tomorrow. And also, best way to support me is just subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. You can just type into YouTube Nathan Robert. Hey, for everyone on the YouTube stream, if you're on the YouTube stream, please drop a like too, if you would. I'd really appreciate that. And if you're on TikTok, hit the follow button. But yeah, we'll be streaming tomorrow. I said, oh, watch out. If you hit the follow button, watch out for people impersonating me. Just know I'll never follow you back. I'll never DM you. I literally sell nothing. I have no course book, WhatsApp, Telegram, literally nothing like that. So anyway, see you guys later. I'll be live tomorrow. Have a great rest of your day. And thanks to everyone on the YouTube stream. MK says CVC owns RuneScape now, I believe. Oh, okay. I think they just sold it. Like it wasn't even that long ago when Carlyle Group sold RuneScape. But yeah, see you guys later. See you, Brian. Oh, you're still here, Brian. What's up, man? See you later. See you, IDK. See you, Obe, Mook, Kirk, Trap.